people who are like long-term, short-term, right? Who are more short-term than long-term. But now think about it. Like if your entire premise was we were trying to sell to the credit markets, but now you're saying, hey, now we just want to attract traders who would leverage up and who would like try to go in for the high yield. Are you really targeting credit anymore? Or are you targeting people that are more short-term traders, right? Not that it's wrong to like sell instruments to short-term traders, but if the stated goal was to like sell to traditional credit investors, and then in fact you are not doing it because of the way you've structured the instrument, then I think something is wrong there, right? Like maybe it's not legally wrong, maybe it's not like even wrong for the company to do that, but something's wrong in terms of like how you're presenting it, and then like what's actually going on, and there's a disconnect about that.
Like a product market fit issue, really. The so this raises an interesting question, which is that um, rather than positioning the preferreds as better than a money market fund, for example, or kind of like a savings account where you do have kind of par, create, redeem, right? You don't have to worry about the principal. Positioning it as more akin to buying a piece of real estate, home, let's say, to rent it out, and that you'll earn the income stream of rent, which will be stable, but your ability to sell it at par is not guaranteed, right? So really the decision making process should be about, do you want this stream of income, and how confident are you about the future dividend rate, rather than trying to worry about, can you get in and out of the principal at par? Does that make sense?
So are you asking me like the
The
investors should?
marketing, the product market fit is of a longer duration than what kind of has been floating out there of, oh, this is like cash.
Yeah, yeah. I mean, I think if you're talking about it and like you're marketing your security as the issuer, yeah, you shouldn't use the kind of like cash thing. I think that's not the best like legally sound way to characterize it. Um, but then also like it is hard to do marketing and it is hard to like grab people's attention. And so I understand like there are incentives at play that just because of how attention starved everything is, right? It's just like you have to try to grab people's attention and then you have to make outstanding statements in order to do so. This is just, I think, how things are in the social media age, right? So uh, it's one of those things where I we could wish it were different, but I don't think things would change that much. Um, but that being said, like the larger point is absolutely correct. Like I think something like Strife, for instance, right? The most senior pref that just like it's basically a perpetuity, um, with of course a risk, with a credit spread that needs to be attached to it. Um, but like that's a very good security, like all things considered. If you are truly a retiree, then you've like did your math and you're like, all right, from today until when I retire till the day I die, like I'm only gonna need this much money per year. This is how much strife I'm gonna need to, fill that part of my investment portfolio. Perfect. Like then you don't have to worry about the price. So like if you're truly a retiree, like yeah, there is a point to be made. Like why bother if the price like collapses below your entry price? Because as long as you're still getting paid the dividend, you know, that's what you bought it for, right? Sure, like what's the problem? But again, like I think the pain that is felt in the market, like at least over the last month, is just frankly because those were not the buyers. The buyers were people that were leveraged long. They were probably trying to earn some like carry spread, and they're probably trying to like be the first ones out as soon as anything went wrong, and then a lot of them just got caught flat-footed, and that is how we saw the cascade that we saw. So I think that's really how it is, and part of it is also like, the super conservative investor that's just buying this for retirement. They're probably not looking at something like this that isn't rated, right? Like you just have to think that like there's just all these other variables at play, and strategy is in a very hard position to have to balance all of this, right? It's a difficult thing to need to balance everything and make as much people as possible happy. So I think that just also needs to be something that's considered, right? Like it's hard. It's genuinely hard. Not that it's an excuse for anything, but it's just difficult.
And on that point, as people kind of get more educated and see the track record for these over multiple years, is that how you change kind of the investor base for these instruments from short-term to more long-term income, or do you stick by your thesis that there needs to be product changes?
Yeah, I mean, I want to clarify. Like, I'm not saying there necessarily needs to be. I think what I'm suggesting would be very helpful.
Yeah.
Like very helpful certainly in the next like 2 years. Long term, I don't think like these instruments are dead unless the Bitcoin thesis that we all have is wrong. Okay.
Right.
Like that's where this is all downstream from. So as long as like I think ultimately what happens is once the bear market ends and the bull market returns, like all of this stuff will be bailed out at the end of the day by the rising Bitcoin price. Okay. That's just what I think would ultimately happen here. Like we can suggest all of these things, like Saylor can and his team can put out these like new frameworks and whatnot, but this is all to just try to outlast the bear market.
And on that point, do you think there will be instability introduced in the bull market by people selling the preferreds to buy the common because now they think that's going to outperform, and then vice versa in the bear market, them at the beginning kind of just dumping their common stock to pick up the preferreds, and we'll constantly see this back and forth rotation? Is that destabilizing?
I think it'll happen. I don't think it'll be destabilizing. And the main thing is during the bull market, you'll just have so much more demand anyway. So, and remember the flexible load here, right? To use a Bitcoin term, right? The flexible load here is really just the ATMs. Like if a lot of people want to buy this thing, but then also a lot of people want to sell it, then the ATMs just won't run as hard. But if a lot of people just want to buy it and the demand is like gushing and overwhelming, then the ATM will run however high it needs to run, right? So that is how I think it is. Like the flexible load here is the ATM. And so I don't view that as a destabilizing factor.
Yeah, that makes a lot of sense. Allard, I've really enjoyed our conversation today. Is there anything that we missed? I want to encourage people to go check out your research report and to dig into it. But before we sign off, are there any major points that we didn't address?
No, I think we've covered a lot. We probably need like another hour or so to talk through like all the stuff happening on the protocol side. Like it's also lots of stuff going on. But yeah, on the corporate side and digital credit, I think this has been comprehensive.
Awesome. Well, thanks for coming on the show, and thank you to our listeners for joining us for another episode of the Bitcoin for Corporations show. As we travel through this bear market, I think now's a great time to be learning more and absorbing kind of what's going on. So we hope you'll join us on the next episode, and don't forget to like, subscribe, leave a review, and share it with your friends and family.
Welcome. This is BFC in NYC, the premier institutional Bitcoin adoption event. We are here with over 300 decision makers from across the industry. We're excited to welcome you, and let's get into it. So the people in the room are what makes today an incredible event. The top companies who are allocating Bitcoin to their balance sheet and leveraging Bitcoin to run their businesses are all in the room, having conversations and making deals happen. All the decision makers from across the Bitcoin ecosystem who have anything to do with corporate adoption, institutional adoption, are in the room here at BFC in NYC. Thanks for coming, and we hope you enjoyed the event. We'll see you in Hong Kong.
All right, everybody, welcome back to another week of BFC Live. I am joined today by Tracy Hoyos Lopez, Head of Strategic Initiatives at Kraken Institutional, and Michelle Weekly, Director of Product Development at Byte Federal. Ladies, thanks for joining me today.
It's so awesome to be here.
Okay, it has been a big week, big couple weeks in Bitcoin. Definitely bear market vibes. Feels like we might have gone through our obligatory black swan event. I want to start with cold card. For those that might not be self-custody professionals, I would include myself in that, that really don't understand what happened. Michelle, could you start by just giving us like a high-level view, like what happened? And we'll kind of jump off the conversation there.
Yeah, absolutely. So first and foremost, I just want to say that if anybody is self-custody their Bitcoin in a cold card and you're aware of this news, you want to get on X, get on Twitter, what's going on. Don't panic, but you do need to move funds off of your cold card very so that's the most important thing. The Bitcoin community has done a great job at getting the message out there, but a lot of people are not frontline. And so if you have a cold card and you have any Bitcoin in there, you need to do it as quickly as you're able to do so. So what happened is going back.
Sorry, Michelle. I just want to say a quick shout out and sincere thank you to Alex Thorne from Galaxy, who has been working full time to help people that have been affected by this in the community. So Alex, thank you so much for helping everybody out. It's it means the world to all of us.
Yeah, absolutely. Rob Ham as well. There's been a handful of people who have really just stayed straight now, been helping people endlessly, and they deserve all the credit in the world. Going back to 2021, there was an error in Coin's code that basically set your seed phrase up in a way. It's a bug into the entropy, and it means that your seed phrase is not very strong. It could actually be weaker than a 2-word password, depending on exactly what firmware you're on. So there are the details out there if you want to dig into devices were affected, the timeline as to when it was introduced. There are some conspiracies that are building. There is a little bit of proof of some of those conspiracies. But ultimately, there was a bug in the firmware on cold cards that shipped in 2021 and after. And any cold card that was generated using the default seed phrase path, meaning you didn't roll dice to create entropy, your seed phrase is not safe and your funds can be swept. There's a couple of unverified rumors that even if you did roll dice, there may be backdoors. I don't know what credibility there is there, but ultimately I think using a cold card, it's just safest to migrate to a different device or setup.
Got it. So, okay, before we get into
also just to give people an idea, and Jake, you mentioned, we're in the bear market. I've had feels this feels a little bit like 22, but also not, because it's so everything that's happening is so completely unprecedented. But 1,616 Bitcoin across more than 5,200 addresses in multiple waves. That's what's been affected with this particular issue. What Michelle and I were also saying, and like we can get into the conspiracies or not, is I think the thing that has really like blown me away has just been how absolutely nasty so many people in the community have been
Oh, yeah.
to those who are not tech savvy. I mean, Isabella yesterday got ripped apart. I can't remember what his name is, but like, you know, either Bitcoin is for everyone or it's not.
Yeah.
But it's not okay to rip people apart for not being technologically savvy to deal with this. And it's not okay to go and attack people that have been in the industry for a while, assisting in that hyper Bitcoinization vision that we all have. And like, it's just not okay to be disrespectful, and it's not okay to like say nasty things to them or about them or completely attack them or say things like, oh, you deserve it because you don't know how to deal with a cold card. Well, you know what? The product sucks.
I
If
couldn't
it's a
agree with that
product-
more.
Like if it's a product that exists and you have to have technical background to use it, then it's only a product for technical people. Then don't sell it to anybody else.
Yeah, Tracy, I couldn't agree with that more. If the device had been coded correct, then the faulty path would have never been available. If you said, I'm not comfortable rolling dice, shouldn't have been able to go any further and set it up. A lot of people didn't roll dice, and it's really, really insane that people who have never even heard the word entropy be responsible for creating their own. I mean, narrative is just absolutely out of touch.
I had no idea what entropy was. And
Yeah,
before
most-
anybody
Same.
attacks me, English is not my first language. So I had to look it up in a dictionary. Then I had to like look up what it means within like the context of like this thing. And like, that's not the point. That's not the point. Either
Yeah.
we're moving to take the whole point of institutionalizing Bitcoin is so that we can have like more things to do with it, less complicated technologies to work with, right? The more people we gather into this ecosystem, the more brain power we bring into the ecosystem, the more tools we have to use these products in an easier way. If companies are going to build products that people don't understand, then I mean, you're SOL because your product is only for a few people, and most of those people are bit 110 people, and most of the people aren't liked to begin with. So there you go.
I want to add one more thing for people who do think they are smarter than everyone else. There's a lot of people online going, well, I rolled dice 200 times. I rolled my dice 1,000. Well, guess what genius is? After 100 dice roll, you're not adding actual entropy. You're actually truncating the front end of your entropy. 100 dice is the maximum entropy that you can create. So if you don't understand what all that means, maybe take a step back.
I have no idea what any of that means. And I listen, I respect people and self-sovereignty. I do. I am not a custody person. And I will tell you why. Because I am so ADD that it's not going to work. I'm going to forget everything. And so every time I was texting you guys earlier, like every time I have moved Bitcoin, I open a new wallet because that is how paranoid I am of like the previous wallet that I just touched. So then I have to I literally just oh, did I send Michelle Bitcoin? Great. I need to open now a new wallet and move everything from this wallet to a new wallet. Like this is just how paranoid I am.
It's good though. It's actually best practices to do that.
Well, I also keep most of my stuff in the exchange because I trust my exchange.
Yeah.
Yeah,
Yeah,
so
I
that's-
don't think. Sorry, Jake.
No, go ahead.
I was just gonna say, there's a saying out there that custody is for anyone, but it's not for everyone. And we really need to reassess the blanketed, you have to self-custody coins, because there's a lot of options for setup, and it's not a one-size-fits-all recommendation ever.
But
Yeah,
also
so-
there were people in the community that had literally flagged to the company the fact that there were these vulnerabilities and they didn't do
Yes.
anything about it. I mean, there's been multiple people on X that have posted their emails and their exchanges that they had with the entity flagging the vulnerabilities in the code. and they were just either dismissed or completely ignored. And so like that's a significant problem that that entity has. Like if your users are flagging a problem, you should probably take a look at that.
Absolutely.
So for someone like me, who I would say like I self custody, but now I'm we're going back to the drawing board. Like we got to consider the options. Like after I read the story, my immediate thought was like, oh, okay, this is like where the ETFs, like that starts to make a little more sense, or holding it on one of the exchanges. If like, what would you guys advise for the pleb like me that is like, yeah, I'm self-custodying, but maybe I need to reconsider. Like, what do you guys say?
So
Michelle and I are going to say opposite things. So I'm going
Go for it.
to let her say it first.
yeah, no, we are. And I think it's good because again, there's no one size fits all. So I will speak to the people that want to continue self-custody, right? Because if you want your Bitcoin completely in your own hands, unconfiscatable, then self-custody is super important, right? And you can absolutely still do that safely. I think right now, I don't want to recommend anything to anyone. I will say that this is a cold card CoinKite specific problem, and that if you have a setup in a Jade or a Trezor box, you're fine. I kind of want to add for now only because AI is advancing really really quickly, right? And I genuinely don't believe that a single sig setup is going to be broken. But in the age of advanced AI that we're in, you do have to stay responsible and stay up to date on what's happening. A lot of people are online right now recommending multi-sig, because if you're in a multi-sig setup, then you're cryptographically, you are super, super safe. Personally, I don't recommend for anyone to set up their own multi-sig. I think if you're not comfortable with a hardware wallet and yourself at home, then collaborative custody options are really, really great. They will walk you through a multi-sig setup. You have Unchained, you have Anchor Watch, Casa. There's a couple of other recommendations out there. And I think Tracy's recommendation is also an option for people. And I will let Tracy go into what she's comfortable with, because again, self-custody can be for anyone, but it is not for everyone. And if you're not comfortable doing something, you shouldn't be doing it.
Yeah.
Yeah, my thing is just like, listen, there's a reason we don't hide our money in our mattress, right? There's a reason like banks were created, and I am not defending banks here, but I don't manage well the stress of self-custody. And I've seen so many of my friends who are tech savvy and who have been in Bitcoin since the very beginning get their computers hacked, their wallets drained, their iClouds hacked. I mean, and it's not like these tech companies are also like providing any help to assist people. Like, you know, I have a really good friend who got his iCloud account hacked, and he's reached out to like, I mean, he's part of this community. He's high up in a big position. And he's reached out to Apple a couple times to be like, hey, can you guys help me out? Like, my account has been compromised. My telephone number has been changed, like all this stuff. And they're like, nothing. Right. So it's not also like the tech community is all coming together to assist people that are also in tech. I am a big fan. Obviously, I work at Kraken. I am a very big fan of Kraken. I am an incredible fan of our security team. And I believe in the products that we have. And I use our products, to be very clear. Like, I don't use any other products except all of our Kraken products. I feel very comfortable there. And so I think that if you want to continue self-custodying, by all means, absolutely. I am not a self-custody person, so I use the products that my company has, and they're amazing. That said, I think that there's a valuable question here, and it's, you know, this whole situation with Cold Card is pushing for institutional custody grade security for everybody. So it's a big push for that. And it's interesting because putting my feelings apart, it's kind of like, well, what's going on that this is being pushed for centralization? Like the whole point of Bitcoin is so that it's fully decentralized. And we're seeing all of these things that are happening right now are gearing everything towards more centralization, right? Because it's pushing you to go to a regulated exchange, because a regulated exchange, obviously it's regulated, they have insurance. If anything happens, they can potentially assist you in recovery. But it's a little crazy that this specific issue, which is an issue that had been flagged by multiple users a long time ago, is now blowing up at the same time that Clarity Act is going into the House, and at the same time that nothing's moving the price of Bitcoin except every time Saylor sells, it tanks. People are now pooping on self-custody. So it's just what's going on? I don't know. There's something going on. Or maybe I'm just so used to the psyop that I think everything's a psyop. But that's why when I sent you guys, what are we going to talk about? Well, it's the roaring 20s. If you looked at what was going on in the 20s, right? The flash market crash and the financial crisis. I'm not saying it's identical, but it's interesting that this is all lining up the same 100 years later, with the only innovation that has existed in finance in over 200 years, which has been Bitcoin and crypto. And we're having all of these issues.
Okay, we hit a lot of stuff, but something I want to dig in more on is you've talked about the centralization of Bitcoin. And we can also see, not outside of Bitcoin, just the centralization and consolidation of power and influence in our greater culture, in politics. So after a hack like CoinKite, tell me about what is it that you see, when you say, I think this is a step toward further centralization, pull on that thread a little more. What is it that you see that are some of these downstream effects that lead to further centralization in Bitcoin?
Michelle, you want to start or you want me to start?
Go ahead. Do you want me to?
Yeah, go for it. Because you get me fired up, so go.
Okay. Well, it depends which path you want to go down, because I think centralization is the key threat here. It's sort of coming from all directions. And Tracy, all of the threats that you mentioned, which are curiously timed, they will push us towards centralization in a way or another. And that's the real danger, because the real feature of Bitcoin is decentralized, right? And so if we allow for the network and all the products and services to be, I don't want to say co-opted, controlled, or taken over, or swooped up and managed, same big banks that it was brought about against, then what have we really changed? We done what have we fought against, right? I don't know if they're ready to talk about the Clarity Act, but the Clarity Act, in my opinion, pushed us further into this hyper centralized and highly regulated environment. And so personally, I did not get into Bitcoin to ever cheer on more government regulation. We need to fight as hard as we can in every direction to maintain decentralization.
So I'm going to say unpopular things. You're going to love it, I promise, though.
I love it.
So centralization is not a bad thing. And before everybody decides to murder me, just hang on. Centralization makes certain things easier, right? The reason I love Spotify and I pay for a monthly membership on Spotify is because I get all my music in one place, right? The reason I like going to a supermarket is because I can get all my nutritional needs, for the most part, in one place, as opposed to having to have chickens, plant things, kill a cow, right? So centralization is not a bad thing. What is bad about centralization is when it is utilized to monopolize and when it is utilized to force people into doing things that they don't want to do. That's really when the problem begins. The reason Bitcoin came to exist, right? And we've all read, like, Satoshi's, like, everything he's written, everything he said. And the reason this whole thing came to exist was, one, it's a peer-to-peer cash system. It's so that you can cut the middleman out. It's the consistent violation of, like, the amount of fees that are charged every time we send $1, every time we pass one card, right? Like, why do I have to pay this person when I can pay you directly? It's all of these controls. It's the same thing. Like, you can't be completely off the grid in your home, your panels and everything. You still have to be locked into the grid. Otherwise, the government comes in and says, like, you can't do this, right? Again, centralization, not a bad thing. But when we're being forced to do things that we don't want to do and to pay that government toll, that's when it becomes a bad thing. But Bitcoin, the important thing about Bitcoin and why it should remain decentralized is because, well, one, we don't want anybody to control it. If we are looking at the debasement of the financial system and, like, current currency system, it's because government keeps printing money. And that's not only our government, it's every government. Every government is printing money. So everyone's money is being completely debased. Inflation is eating it up. And the value of you're a slave. You are a slave. You can't stop working because your money continues to be devalued. And that goes for everyone. I mean, unless you're a billionaire, a 100 millionaire, a trillionaire, which only one up until now, like, you're seriously going to find yourself hurting. And that's why we're seeing so many people in our community, like, try and go to more favorable places with better tax treatment because they can't. It's becoming increasingly difficult to accumulate wealth. And so this is why we Bitcoin. It's a hedge on top of, like, a digital economy. We're moving towards a digital economy. This is the one that's stuck. It works. There's proof of work. Okay, all of that. Yes, but our currency is being debased. So when the value of $100 bill becomes $1, like, what are you going to do?
Yeah.
What are we going to do? Right? Bitcoin is finite. So the value of Bitcoin will be better. Now, of course, we can talk about the volatility of Bitcoin and, like, the insane. And quite frankly, I think that part of what we're seeing here is that Bitcoin got institutionalized. I'm not going to say so quickly because this was 15 years in the making, but it was, like, slowly, and then suddenly.
Yeah.
And then in that suddenly part, it became very institutionalized. And while we recognize the value of Bitcoin as a peer-to-peer cash system, which we hope that one day we get there, Bitcoin has been named a commodity. And also, Bitcoin, right? Banks don't, let me take a step back. If Bitcoin becomes as popular and as views as a peer-to-peer cash system, it threatens the US dollar.
Yeah.
Which is why we're seeing also the rise of so many stablecoins. I'm sorry, or how we have seen the rise of so many stablecoins, and the idea that the stablecoins, which is true, works as the proliferation of the US dollar everywhere in the world. But it's still, you need to print money to back those tokens. So it's not changing anything. Inflation continues. But the reason why I think, and Michelle and I have spoken about this ad nauseum, the reason I think there's an outright war right now, and not everyone, particular people attacking clarity. You've got all of these different issues. We've got cold card, you've got Bitcoin ATMs. Like, it's happening to prevent people, retail, from really, like, utilizing Bitcoin on a daily basis, because that means if you're using Bitcoin, you're not using US dollars.
Yeah. I want to get into ATMs on-ramping into Bitcoin, but I want to go back to the Clarity Act. I would say if you look at the sentiment or the way it's spoken about on X, is like, this is generally a positive thing. At least that's the way it's been branded. I'm curious to hear, Michelle, like, your thoughts. You said, you were unsure, or it felt like a further centralization of Bitcoin? Tell me your understanding of the Clarity Act and like what are the actual implications for the space?
Yeah. So I understand why people want clarity, right? You can't build in an environment that's either unregulated or the regulation constantly changing, and you do something, you think you've done it correctly, and a year or two later at you and they say like, no, actually you could go for this or for that. Totally understand the desire and the need for clarity. I think the Clarity Act itself it's really, really extensive. I don't know how many pages the current version is, right? In my opinion, broadly, what it really does is it continues the virtualization of the Bitcoin ecosystem. A lot of the big industry players, Byte Federal, Kraken, a lot of the larger services businesses are already fully regulated. We comply with all laws, the BSA, KYC, all of that stuff. We are very compliant businesses. But the Clarity Act is going to scoop up even more of the ecosystem and put them into that regulation. And I think there are sections of it in particular not well enough defined. They could in the future come back and say, well, here's how we interpret that, or here's what we really meant. And I think that that's kind of dangerous. So I don't know how much energy it's worth fighting. I think it's inevitable. But I just am not going to cheer on more regulation. And so I guess that's my position on it. I think it is inevitable, but people need to be careful and cautious about how excited about, more regulation, more laws, legislation, because we comply with all of that.
Real quick, do you think they get it done and it passes in the next 2 days before they go to recess?
I don't. I don't think so. No.
Yeah. Okay, I want to go back to on-ramps. So Tracy, you had mentioned that there is hostility or a war on-ramping new participants into Bitcoin. Tell me more about your thoughts on that and where you see this actually playing out in businesses, in the Bitcoin space, in the economy.
So if you take a look at Clarity, Elizabeth Warren added a 3-page addendum to the Bitcoin ATM part. And it makes it extremely difficult for Bitcoin ATM operators to operate a profitable business, right? Because it's an outright war that's being declared against them. What's crazy about it is that this is such an incredibly and highly regulated industry.
Yep.
So all the Bitcoin ATMs follow all the money transmit. They have money transmitting licenses. They have all these things. So to add additional requirements that make no sense because those requirements are not being asked of in regular ATMs, the argument that the people advocating for this 3-page addendum are saying it's consumer protection. And that is just such a load of crap because, okay, the estimate, let me look these numbers up, because when you look at the numbers in the TradFi industry of the amount of fraud that is committed, right? Because that's what they're saying. They're saying, oh, people go to this Bitcoin ATM and this fraud is happening. Let's just start by the fact that 98.8% of Bitcoin ATM transactions are legitimate. That's the first. The second is they have a lower fraud rate than the broader financial industry. Now, the 389 million in losses, which is It's that like 1.2%. While it's significant, it's generated from a 3.63 billion annual on-ramp ecosystem. So the loss ratio compares quite favorably to many regulated financial products. And when you are looking at how much actually is, I'm looking at these numbers. Okay, so like the fraud categories, imposter scams are a $3.5 billion loss. Tech and customer support, it's 2.1 billion, sorry. Romance scams, 929 million. These are all numbers by the FBI, FYI. I'm not making these numbers up. Government impersonation scams are 798 million. Gift card scams are 250 million. That is a significant amount of losses. I mean, okay, let's just say this. All right. Bitcoin ATM fraud represents 1.9% of total internet crime losses reported to the FBI in 2025. Those are the numbers for 2025. The same regulators banning Bitcoin ATMs haven't moved to ban wire transfers. So there was 3 billion in BEC losses. That's like the email stuff. Gift cards was 250 million, which or like phone-based bank impersonation scams that funnel victims to like crypto kiosks in the first place. So like none of these other people are getting banned when it's way more money. And what that tells us is that if you're banning an industry in which the fraud is so de minimis in comparison to traditional finance, that means that the banks are behind it. So did choke point 2.0 fully end?
Yeah.
And I think that that's also why you have like, you know, our CEO, one of our CEOs, Arjun Sethi, one of the things that he said is like, this is why clarity is important, because even though it's not written in a perfect way, and no law is, it gives us a starting point. And because ongoing 4 years of regulation by enforcement during the Biden administration was absolute insanity. But that is to say, it is such a de minimis amount of fraud that occurs in the Bitcoin space. And when you see Elizabeth Warren say these things come out of her mouth, and you're just like, what are you talking about? But then you go and see like who funds her. You're like, oh, okay. I mean, have you guys seen like all the propaganda advertisements that they started to do against the Clarity Act? It's crazy because it's all about Trump. And it's crazy because crypto and Bitcoin is about money. And I'm not really sure how the president has anything to do with that, because the law does not involve the president, but that's like a separate issue. That is to say, when you look at like how our industry is treated with all of these things, and when you look at like what's going on and what the penalties are, and like this 3-page addendum and all of this, we're still under attack by the banks. And what I think is happening, and I can be wrong, and I'm open to being wrong. I've been wrong not that many times, but a fair amount of times. I think, and I think we've talked about this, Michelle, I think the banks are buying themselves some time. I think that the war that we're seeing right now is that they're buying themselves some time, because if you see, a lot of financial institutions have been acquiring smaller crypto exchanges, have been acquiring more rails or more rail infrastructure, or they've started, for the most part, a lot of them have decided to start building their own rails, which I find completely insane, because why would you build something when you have zero track record of building anything and the industry has a maturity of 15 years? Like, that can be a separate conversation. But when you look at like the banks getting more involved in Bitcoin, when you look at the banks get more involved in the addition of crypto rails, you're just like, okay, so these guys are clearly fucking with us, and they are clearly just buying themselves some time until they have their own rails up and running so that they can obliterate the crypto industry as a whole. And I'm referring into Bitcoin and crypto there because the obliteration would be entirely to everybody. And then the industry, they get rid of the industry. So there's no intertwining this world with that world. That world just comes in, steals, plunders, takes out, and builds their own thing. That's what I think. I can be wrong. I'm open to being wrong, but like, that's me. Like,
I hope you're wrong, but I will tell you there's a lot of things happening that support that thesis. You know,
Like what?
every couple weeks we get a partnership or an absorption. There's lots of M&A happening, and if you look closely, every time one of those moves is made, it sort of obliterates or makes unnecessary a little piece of the ecosystem here or there. Somebody built an amazing product, and now, oh, the banks are doing it themselves, or this institution. I think it's very accurate to say that they're buying time so that they can build and absorb and coordinate and line their chess pieces up to ultimately win.
and there's ultimately like, listen, this has been the most pro crypto administration we've ever had, and that's just a fact. Nobody can actually fight that. Nobody can actually have an intelligent conversation or argument with me and tell me that that's not true. That is a fact. This has been the most pro crypto administration we've ever had, and we've made significant we're significantly ahead. Now, there is something very funny when you've got, and I have many clients. I have many clients from many different companies. I have many clients from many different protocols. I deal with many people. It's like my favorite thing about my job is just the amount of people that I love because I've gotten to meet in the industry and they do so many cool and different things. And so like when you have your clients come and tell you like, hey, we've been trying to stop fraud, but the CFTC and the SEC are telling us to let the fraud happen because they want to be able to follow this and track the addresses that are doing this. You're just like, what? Like, you guys understand that there's a human being behind this, right? That money belongs to somebody. They've probably been accumulating this money for a significant amount of time. And you want us to like not stop fraud, not me, clients, right? And you want these clients to like not stop the fraud because of what you have going on here. That kind of has to make you think. I get it, but like, really, guys? We have to wait for the commission of the crime where we're probably not going to be able to recover that money and give it to the client. I don't know. That's just weird. And those are the things that happen that like people don't really talk about that we should be talking about because it's kind of messed up that the entity that's supposed to be assisting.
Ways to actually stop the fraud, why not implementing those? Because provable, easily implemented ways to stop the fraud that's happening. And we do a lot of that. So why are we being shut down? It's a very good question.
Michelle.
And I want to, I agree very much, Tracy, that this has been the most pro administration. You know, people like to like think shots online like, oh, I bet you regret your vote. No, you have no idea where we would be if we had gone. Like, we wouldn't be here having this conversation. This has 100%. Been a very pro Bitcoin and crypto administration, made strides, huge strides. There's just so many battles still to be fought. And our battles, like with the ATMs, is not necessarily in DC. It's part of the ecosystem on a state level, and it's being driven by agendas. I do think it's important to remind people of that because it could be a lot worse.
Oh, I think it will get a lot worse because when you're looking at it, like what is a Bitcoin ATM? It's an on-ramp. It's an on-ramp into crypto. So if you're taking this down, then the question is, what's the next thing you're going to go after? Because
Exactly.
you clearly have an issue with people taking fiat and converting it for whatever crypto choice they have, right? Whether that's Bitcoin or Ethereum or whatever it is, doesn't matter. But
Yeah. Yeah, and I think, I've always said, like, look, there's a lot of focus on the anti-DC efforts, and I think that's important, but it's a little bit of a false narrative because you get rid of the cash economy, you don't need BDC. You can control everything digitally. So I think, the war on the big ATMs is because they're cash on ramps and they don't want any cash out there. They don't want people to transact in cash or save in cash, convert cash directly into Bitcoin without banks involved.
Let's put on our tinfoil hat. Seems like we've already done that a little bit. I wanted to pull on that thread. So again, like when you say they don't want us to transact in cash, the average Bitcoiner might understand the why, but tell me a little bit more about why wouldn't they want us to transact in cash? Why do they want to stop on ramps? Not just ATMs, like all the different ways you get on board into Bitcoin. Yeah, tell me more about that.
Yeah. As far as the cash piece, last piece of the economy that they can't serve. So any move that you make from your bank account through a Visa debit card, a credit card, is all hyper surveilled. It can be controlled, turned on, turned off at any moment. And if you have cash, if you take some cash to the farmer's market, you buy eggs, you can buy milk, you could buy raw milk. Oh no. You can buy whatever you want, and they don't know. Right. And so that's the first and biggest problem is the surveillance state will not stop until they can surveil everything. And the economy in in transacting is the focal point for that, right? You mentioned earlier, like complaints that made in the industry when fraud actually stopped because stops them from being able to surveil. And I think there's a lot of signal in that. We could speak a lot about that. The cash is what enables people to stay, I don't even want to say off the grid. It's just preventing people from having every move controlled. I mean, you do want to buy raw milk, right? Because that it's healthy, and maybe you're totally crazy for thinking. Well, if all of that is done digitally, then just look at those transactions and say, here's a milk vendor, and this is approved by the FDA, so we're going to block all those transactions from happening. And that obviously scales to larger and larger problems, but I think it's a good example. And the nuclear option really is having cash and being able to buy a hard asset they can't inflate away. I mean, that's the heart of, that is really like sending into the heart of fiat currency is the ability to do that. And so I really believe that that's why they cannot tolerate people do so.
I mean, if you go to Europe, there are a lot of places. I mean, in Amsterdam, they're not accepting cash anywhere.
Yeah.
It's all digital payments, all of it. This is why I don't do loyalty cards, by the way. This is why they're like, oh, 10% if you use the loyalty card. I was like, yeah, I'm good. I don't need to know when. I don't need you to know when and what brand of tampons I buy. Like, I'm good. We're all good here. You don't need to bombard me with advertisements and sell my data and do all of that. But what is interesting is that they absolutely want to get rid of cash, and it's slowly happening. And Michelle mentioned the whole CBDC thing. Listen, what is a CBDC? Okay, it is a central bank digital currency. Okay. Why do they want a CBDC? Okay, because a CBDC will allow them to do the same thing that they're able to do with like a bank account, right? They call bank and they say, shut this bank account or give us this information or blah, 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 blah. And the banks go and do it. You know, it's all Bank Secrecy Act, post 9/11 stuff, all of that. All right. What? There's a myriad of tokens that act like a CBDC.
Yeah. Oh,
We saw exactly. And we saw with the Canadian truckers what happened when all of the centralized exchange accounts were starting to get turned off because the government didn't like that they were protesting.
Yeah.
So like, but this happens within crypto, right? This also happens within Bitcoin, by the way, because if you have your Bitcoin in a centralized exchange and you're moving in that manner, they can shut down your account. Like, of course, if you're doing like unlawful activity, yeah, you're going to get your account shut, right? But they're moving everyone to this digital economy, right? Like stable coins and whatnot. One, to continue like printing dollars and backing dollars, and also to make sure that they're controlling like where you go, what you do. I mean, and are we going to get into like the, you know, like the social credit systems like Palantir and Peter Thiel, and like how they're starting to centralize all that? I mean, how they bought like this massive chunk of like Aura Ring, and like all now of your data that you like an Aura Ring is now like partially like Palantir's. Like, you can't tell me that that is not setting things up for a social credit system.
Yeah, the evolution of X into everything app, the way that China has WeChat. You know, I have been a big fan of Elon buying Twitter, and I think it's great for free speech. It's great that we can all connect, but I am absolutely not using X money. I don't want an every app. You know?
Yeah.
No, I want a super complicated piece of technology that I don't understand how to get my Bitcoin off of. That's what I want. That's really what I want. I'm a very big fan of cash. I am a huge fan of cash, and I buy Bitcoin, of course.
Keep cash alive.
I love cash. I love cash. I dream of like one day running into like a big plot of cash at the beach in Miami. Cash, not cocaine, cash. And like, just like, you know,
just washing up on the shore, like,
yeah, just washing up on the shore and wrap and be like, oh, somebody sent me a gift. Yes, absolutely.
We can bury it in my yard, Tracy.
Well, no, I'm going to be like, this is abandoned property. This is,
yeah,
I'm just going to, yeah, it's abandoned property. So I'm just going to take, I mean, if people can make that ludicrous argument with like dormant accounts on exchanges, then I can go and make that argument over cash that I find at the beach in Miami Beach. It's mine now. I'll just need to pay the taxes and then it's all mine. All mine.
Just consult the IRS. No, but it's so important. I think a lot of people like want to do the easy, convenient thing, right? And it's to like load up your phone and just do a little tapping and your dollars and numbers go through the matrix. But cash is so important. You know, I'm based in Florida, and we, over the past few years, had these really terrible hurricanes. People were without power. I was without power for 10 days. The cell towers go out. And let me tell you how important it is to have cash in those cases. I mean, you can trade with other things, but cash is king. And when 100%. Everything goes down, it really shows. So it's important to maintain some cash, use some cash. If you know, I buy all my meat from a local butcher that prefers cash, and I prefer them because of that. So
cash is a good tool. Cash is a fantastic tool. Cash is also a way of buying Bitcoin. This is why we have ATMs, Bitcoin ATMs. But I think the biggest thing that's also like offensive here on the Bitcoin ATM stuff, to go back to it for a second, it's just like the Bitcoin ATMs, like the population that it actually caters to is a completely unbanked or completely like underrepresented population of people in the banking like system.
Yeah.
Not everybody has a bank account. Even in the United States, not everybody has a bank account, especially minorities tend to deal more in cash because they live paycheck to paycheck to paycheck. So it's not like they have like a lot of money like in their accounts or anything. They like get their work check. They go to one of these places where they like get cash for it. And then they like operate with that cash throughout the week until like their next paycheck. A lot of the people that are utilizing Bitcoin ATMs are those people.
Yeah.
They're
The average
people.
buy is under $300. I mean, these are people that are saving everything they can in an asset that's not going to be inflated away.
So like that's I think what's like most offensive because the mission of the
Right.
industry, or the original mission before a lot of people got lost in their journey is to bring financial freedom to everybody in the world. So that what if there is no bank close to you? What do you do? How do you like transact? How do you like run a business? But then you see how like the attack of cash, I think, Michelle, I think you and I were talking about like how when you look at the QuickBooks application now, when like QuickBooks took away the tools for all the cash reporting.
Yeah, so we can do reporting, but when I went to work for Byte Federal, I mean, the industry was under attack, and I assumed that the problem was with Bitcoin, right? Well, we're a crypto company, but actually, most of our problems are insane exponential expenses, are because we are a cash-based business. We've been debanked over and over and over, not necessarily because we deal with Bitcoin and crypto, but because of cash. We use QuickBooks for accounting. Yeah, I had told Tracy this earlier. There are certain features within QuickBooks that they disable simply because you are a cash-based business. That should be criminal. That is the actual crime, is claiming that the simple use of cash is a crime, because it's not. A lot of people are completely unbanked, and those people still matter, right? They do run businesses. They are a huge part of the United States. We can't forget about those people. Yeah, we pay.
You're also incentivizing people to commit a crime because if I don't have the tools to report all this cash, what do you want me to do?
Right.
Oh, okay. The more complicated you make it, the more people are going to be like, you know what? Fuck it. Hide it under the mattress. We're just not reporting it. I mean, and that does happen. I live in an island. I live in Puerto Rico. I'm from here. Every time we have a hurricane, like Michelle said, you need to deal with cash. So like, there's all these cash transactions happening everywhere. There's a whole ecosystem of it. And there is like no way of doing things then properly because the tools are being taken away. And you have to think that. And I know, Jake, you asked me, like, do you think that this was made specifically for like the crypto and Bitcoin industry? And I was like, well, I don't know if it was done specifically, but I think that it was done with the intent of forcing businesses to then not accept cash because the mechanisms for reporting those earnings isn't there.
Question. So I think a lot of times I see the disconnect between like the average retail, like pleb, I'm just a Bitcoiner, I don't care about anything else, and then the institutions and like Bitcoin companies that operate in the space. They hear that and to me, I see the direct connection. It's like if the regulators make it difficult for Byte Federal to run their business, the downstream effect is all of these unbanked people are unable to on-ramp. And so what would you say to the person that goes, I don't care about the institutions, I'm just a Bitcoiner, not for me. What would you say to them when there's challenges with the institutions and how that actually the downstream effects will reach them?
It's a good question. I think if they are absolutely not going to stop with Bitcoin ATMs. You might not buy your Bitcoin at an ATM, But if we don't fight for everyone to be able to access Bitcoin, if we don't defend all of the on-ramps, they're not going to stop here. Once they successfully shut down the cash ramps, they're going to go after something. I don't know exactly what might be next, but they're going to continue to increase the bullseye, right? And if you just say, oh, I don't care, affect me, I don't care, that doesn't affect me, by the time you get to the point that it does affect you, there's going to be no one left to fight for you. You know, there's that famous saying, they came for me, and then there was no one left. And so, you know, I think we all need to take a step back and remember why we're here, remember why we got into Bitcoin, and take a look around and realize that it's worth fighting for. All of the on-ramps are worth fighting for, whether it's an institution or a tiny little ATM at a gas station in the middle of nowhere. Everyone in this ecosystem matters. I don't know if that answers your question, but
it matters. And it also, like, we're in this because we know that the world is going to hell in a handbasket. And at some point, and it's going to happen, and we all know it, it's why we're so frustrated by the situation. We don't know who's going to be in the next admin, or the next one after that, or the next one after that, or who's going to be in the Senate, or who's going to be in the House. And we got into this because we know that in a weird way, a social credit system is coming to the United States. It's more challenging to implement in the United States because of our Constitution and because, you know, I think we're a country of hotheads. And so, like, we'll probably, like, go to war on this. But the whole point of this thing is that when they decide, we don't like what you say, we don't like your opinions, we don't like what you think, the only way that we know to punish you is through your pocket.
Yeah.
Because we're already causing inflation. Oh, and you know what? We're going to take now all that devalued money that you have in your account, and we're going to shut it down. We're going to shut it down until you change your opinions or until you're just quiet and don't talk about anything, right? And they'll monitor you because we're already being freaking monitored with these things. They're already listening to everything that we're saying. And that's not a lie. You see it every time you talk about something. I mean, I guarantee you, I mentioned tampons earlier. Jeff, let me know later in the week how many tampon advertisements you get on your account if your phone was close by. Like, but it's a reality. So we Bitcoin because we want to make sure that when all of that happens, we can still feed our families. Yeah. And we can still help our friends. And we can still have our own community and survive whatever apocalypse whoever is in power is going to bring down against us. That's why we Bitcoin. That's why this thing is worth fighting for. That is why when we see a 3-page addendum that makes no sense because the traditional finance industry is treated completely different, we are still being discriminated against, and we still have a fight. Now, is the fight significantly less? And are we now better equipped? Yeah, of course. We absolutely taught everybody a lesson in the last election. So we have power as an industry and as a community. But to continuously label us as criminals is irresponsible and should be criminal. It should be. Because you're putting a target on everybody's back in this industry when all we want to do is make sure that when all of y'all out there mess up, we can still feed our families and help our communities.
Yeah, I think that's a good place to wrap. Michelle.
Oh, great. We're not going to get into the flop cameras. Awesome.
We'll say that. We'll say that for the next one, and we'll make sure we bring our tinfoil of hats. Before I let you guys go, Michelle, where can listeners find you, and where can they learn more about Byte Federal?
Yeah, so they can find me on X. I am only on X. I do have a no star that's mine, but I'm not active there. So it's just Michelle Weekly on X, and you can find Byte Federal there as well. I do have a fraud website where you can learn all of this. We're keeping track of all the FBI statistics, and it's a really great resource for anybody who is in the industry and maybe wants to understand either what's happening or how their little niche part of the industry can fight fraud. And so and keep cash alive.
Tracy.
I'm Tracy Hoyos Lopez. On X, I am Tracy Hoyos Lopez. I work at the awesome, most amazing company out there, Kraken. And I am the head of strategic initiatives for Kraken Institutional. If I can ever be of any assistance to anybody, whether that's in my division or anywhere else, it would be my pleasure. I love my company. I love Kraken. I love our vision. I love where we are headed. This is still the future. It doesn't matter that we're in a down market. Bitcoin is still worth fighting for.
I love it. Ladies, thanks for joining me today.
Have an amazing day.
Thanks for having us.
Welcome. This is BFC in NYC, the premier institutional Bitcoin adoption event. We are here with over 300 decision makers from across the industry. We're excited to welcome you, and let's get into it. So the people in the room are what makes today an incredible event. The top companies who are allocating Bitcoin to their balance sheet and leveraging Bitcoin to run their businesses are all in the room, having conversations and making deals happen. All the decision makers from across the Bitcoin ecosystem who have anything to do with corporate adoption, institutional adoption, are in the room here at BFC in NYC. Thanks for coming, and we hope you enjoyed the event. We'll see you in Hong Kong.
I think the thing that has really blown me away has just been how absolutely nasty so many people in the community have been to those who are not tech savvy. I mean, Isabella yesterday got ripped apart. I can't remember what his name is, but either Bitcoin is for everyone or it's not.
Yeah.
But it's not okay to rip people apart for not being technologically savvy to deal with this. And it's not okay to go and attack people that have been in the industry for a while, assisting in that hyper Bitcoinization vision that we all have. It's just not okay to be disrespectful, and it's not okay to say nasty things to them or about them or completely attack them or say things like, oh, you deserve it because you don't know how to deal with a cold card. Well, you know what? The product sucks.
I couldn't agree with that more.
If it's a product that exists and that you have to have technical background to use it, then it's only a product for technical people. Then don't sell it to anybody else.
Yeah, Tracy, I couldn't agree with that more. If the device had been coded correct, then the faulty path would have never been available. If you said, I'm not comfortable rolling dice, shouldn't have been able to go any further and set it up. A lot of people didn't roll dice, and it's really, really insane that people who have never even heard the word entropy be responsible for creating their own. I mean, the narrative is just absolutely out of touch.
I had no idea what entropy was. And before anybody attacks me, English is not my first language. So I had to look it up in a dictionary. Then I had to look up what it means within the context of this thing. And that's not the point. That's not the point. Either we're moving to take the whole point of institutionalizing Bitcoin is so that we can have more things to do with it, less complicated technologies to work with, right? The more people we gather into this ecosystem, the more brain power we bring into the ecosystem, the more tools we have to use these products in an easier way. If companies are going to build products that people don't understand, then I mean, you're SOL because your product is only for a few people, and most of those people are bit 110 people, and most of the people aren't liked to begin with. So there you go.
Is quantum computing a threat or is it overblown?
It's both.
I am fascinated by quantum computing.
I think there's definitely a lot of unknowns with quantum computing.
It is a theoretical risk on the Bitcoin network.
The big threat, in my opinion, is the discovery and unlocking of wallets that have been lost forever. Bitcoin is a scarce asset that you can make more of, but you can find more of it by unlocking these old wallets that could pose a threat to Bitcoin.
The quantum concept is, what do you do with the Satoshi coins if they are not quantum resistant and they don't move? It's a really interesting philosophical debate because you could argue that if quantum computing is a real threat and it can come and crack the Satoshi coins, I mean, obviously there's a probability of having a bad actor that wants to tear down the entire ecosystem, but the game theory would suggest that there's more incentive to break the Satoshi wallet, keep the coins, and build on that into the future.
I don't know what the answer is, but I do know that there are a lot of teams working on protecting Bitcoin against it. Teams like Blockstream have a lot of PhD engineers currently working on upgrading Bitcoin to stave off those threats.
I do believe that the technology, as all technology does, will progress and get better. The Bitcoin network has the ability to upgrade and change and morph, and I think that's really the beauty of Bitcoin, is that it's distributed network of nodes. Frankly, I'm currently unconcerned by quantum.
The question is still if and not when. Still, it is important to take that question into consideration and most importantly, not add changes to the protocol with rushing into a solution in search for a problem.
There are people in the Bitcoin community that don't want to see a change to Bitcoin. They believe Bitcoin will be fine as is, and it's designed the way that Satoshi envisioned, and it would be a bastardization of what Satoshi viewed if we make a change to the Bitcoin protocol.
And my view is that Bitcoin will win. Bitcoin will actually be the best prepared for the future of what could be quantum. And you have already solutions that are being proposed by the market, and the best will win. And my view is that the best will be an optional one where people can opt in over time as they perceive a potential risk.
I do understand why people have the fear. I think it's an incredibly complex topic. We're literally talking about quantum physics, and I'm no expert, but from the people that I've listened to and the people that I trust and the research that I've done, I do not think it's an immediate threat. And if it were to become a threat, there are things that the Bitcoin network can do to protect itself.
I would say the threat is less imminent than the headlines suggest, and the work being done already to address any potential threat in the future is more robust and diversified than people think. And what I mean by that is there's lots of different work already underway that they range from changing the protocol itself or updating the signature scheme to post-quantum proof signature schemes versus, say, having contingencies and plans that would allow somebody, in case in the future they need to move or migrate to that signature scheme, they can. And so there's a lot of work being done, and the community is already discussing and debating ways that this could potentially happen, but it seems like the threat is more theoretical in nature right now. And I think people underestimate Bitcoin's resilience. Bitcoin is the most secure computer network in the world. It's decentralized. And so what that means is there's a ton of eyeballs looking at this open source code. They're maintaining it, looking for vulnerabilities, making proposals, there's a ton of discussion, and that hive mind is one of Bitcoin's biggest strengths. And that's why its uptime is 99.9%, despite it probably being the biggest honeypot for any potential attacker to go after. So I think Bitcoin is extremely resilient, and people shouldn't underestimate it.
I think it makes for a great story. It is incredibly interesting tech. It'll continue to move forward. We saw this back there with the Y2K bug back in 1999, where the world was going to implode. Technology marches forward, and Bitcoin continues to adapt for it. And if anybody's worried about quantum breaking Bitcoin, they should be more worried. Quantum will break everything way, way before Bitcoin. And Bitcoin's already adapting to it because that's the nature of open source software and something at this kind of network scale. So it's actually going to unlock incredible possibilities. So I'm not one of these people that sees the progression of tech as dangerous. I see as we adapt to it, Bitcoin it will adapt to it, already is. The discussions are great around it. And we're going to see many, many great things unfold from quantum computing.
There's multiple attack vectors for quantum on Bitcoin, but there was even just a paper that was released a couple of weeks ago where without even having to go through a protocol upgrade, we know how Bitcoin and Bitcoin wallets and the consensus mechanism can be completely quantum proofed. So is it a threat? Yes. Are there ways to alleviate that threat such that it will not destroy the Bitcoin network? Absolutely. Do we have to come to a consensus in the Bitcoin community as to what we need to do to protect Bitcoin? Absolutely. Do I think that's going to happen tomorrow? No, but I think we have some very smart people in the community that have figured out ways to make this work, and we have a couple of years before quantum really becomes the true threat that it may be. And at the end of the day, I'm more worried about what quantum and its threat will be on the global financial system as a whole, more so than just native Bitcoin.
Trump is not doing the low government spending thing. He's going to inflate the dollar. He's going to print, but the printing is going to go towards the building. A lot of Bitcoiners thought that the Bitcoin revolution would happen from plebs just holding Bitcoin. That wasn't really a viable option.
My fear is that, unfortunately, on the other side, we have the takers who have never created a single dollar of economic growth in their life.
No one's buying that if we don't do it, China's going to do it and stuff. It's not motivating anyone. And that's what AI needs. It needs a corporate narrative.
There was a lot of noise because Bitcoin mining uses too much energy. Now it's AI data centers use too much energy.
The most humane way is a type of UBI for the sludge people who can't keep up. I don't want to. Some of these people aren't going to be able to change their minds.
As a master communicator and master of narratives, someone who's worked at the Senate Banking Committee, what is the master narrative that would sell this abundant future that you're talking about? I remember in Abu Dhabi, we talked all about the flood and all of that stuff. It's just interesting. Like, I'm all for conspiracy theories, but a lot of times, you know, it's like not as conspiratorial as you think. And it's like there's these giants hiding, and if he's even afraid to even talk about it because they'll kill him, and it's like, come on, man, we got freaking phones these days, bro. Like, if there was giants, we'd freaking know about giants. And like, certainly there's like 8-foot guys in the NBA. Like, it's not that big of a secret.
No. I absolutely roll my eyes at all the UFO stuff, and always have. I don't believe in aliens or anything like that. But what I do believe is that just seeing how fake the news is over the past 10 years, let's say, and then realize that history is probably 10x faker. Like, we can't even get the last 20 years right. Like, you can ask half of the people randomly on the street, and they'll tell you Obama was the greatest president ever. Trump's a rapist. You know, you're just going to get a fake version. Now, which one's real? That ends up being whoever wins the war. And so if we can't even get contemporary news right, what are our chances with history? It's a story. So all I'm saying is, I don't buy the story. Do I know what the real story is? No, not even close.
Do you think we're closer to truth today, even though we have more ability to manipulate and psyop, but because of the increased information, we might be closer to truth today than we were in the past?
We'll as we go through these times of change, you're already seeing the process. Like, we're reinterpreting the 1960s in America right now. We're reinterpreting World War II. If you ask the younger generation about World War II, it's not the same story we were told. World War I in particular, as Bitcoiners, we have reinterpreted for pretty much our entire Bitcoin existence. We don't buy the World War I story at all. And so this reinterpretation of history happens to be useful to the time you live in. So none of them are true. You just end up telling yourself a story that is useful to put the train back on the tracks and then re-experience a new kind of golden age. One day we'll destroy the one we're building now. We'll be back in a new period of anxiety, wondering about the time we live in now. Won't be us, but whoever else is there. So history is just a useful story that you can apply to get meaning out of the times you live in currently. So that's why it's so fake. It's not, no one, I mean, maybe someone's out there trying to trick you, but honestly, the people who win, good, bad, people we agree with, people we might have aligned with, reinterpret history as it relates to them, and then that becomes the official story going forward. We're doing it with Rome, we're doing it with all these places. You can't believe a word you hear about Rome. It's not even as fake, you know?
All right. Nolan, give me a short 60-second introduction, like who you are, what's your key area of specialty and focus, and what have you been working on for most of your career?
Well, I'm trained as a lawyer. I never really practiced too much law. I worked in Japan for a little while, in fact, when Bitcoin was created. But in that period, I was in Canada as well. I went to law school in Canada, and there was a bit of a political revolution in Canada at the time. Stephen Harper was coming to power, a conservative, sort of a proto-MAGA time in Canada. You know, the media hated us, that we couldn't win. U2 came and campaigned against us in 2004. But I was a young law student. We won. And this ended up giving me tremendous access to executive branch, legislative branch, research branch stuff. And I ended up working on the Canadian Senate Banking Committee. And the Senate Banking Committee is sort of the reason for Canada. Canada was created as a result of the US Civil War. But basically, they were worried of commercial interests of the Union Army going up and taking all of Canada. That was a British colony at the time. So what ended up happening was London cut Canada off of money because anything that was an investment for London and Canada just was seen as plunder because the Grand Army of the Republic could have taken whatever was valuable. So they said we can't. The City of London said we can't invest. So Canada got together and copied American federalism, but it put banking as a federal competency. So it's the one thing it did different than the United States. And so the Senate Banking Committee that I worked for was really the point of Canada. It's sort of the original committee. It has a certain amount of prestige, I guess you can say, in the sense that it's seen as kind of a think tank. It's not really contentious as a political body. It's not designed to be political. But I did a study of the financial crisis and then the FATF money laundering thing, and I had both liberals and conservatives furious about what a scam FATF was and how the whole money laundering regime wasn't working. They weren't catching anyone in Canada, and that had liberals super angry. But I heard about Bitcoin in that time in 2012, and so I got a Bitcoin study together in the Canadian Senate Banking Committee. I got Andreas Antonopoulos there. It was a big hit. We had a great time. Got some media out of it. That was kind of my job, was to get into media narratives, which is still kind of what I do, right? Hijack media narratives, find a way to get a story into the public consciousness. And so I did a magic trick or a publicity stunt or whatever you want to call it. When we tabled it in Parliament, I had the op return script already back in 2015. I used the op return to hash the report into Bitcoin's blockchain with a just a little slogan: Satoshi's invention deserves a light regulatory touch. This ended up getting worldwide media attention because it was just a fun thing for a committee to do. And so that got me in touch with the guys that were restarting CoinDesk in New York City. It had begun in London in 2013, but was moving because of financial distress. They did the whole Bitcoin balance sheet, but quite early in 2014. Not a great idea.
Yeah.
We had hundreds of Bitcoin on the balance sheet at CoinDesk, but had to sell it to keep the lights on. And finally, Barry Silbert bought it. And so I moved to New York City and helped build CoinDesk and the event up. But when I had a chance to go Bitcoin only, which is what Bitcoin Magazine did, I joined Bitcoin Magazine around the time of the Bukele show, 2021. And I worked with Bitcoin Magazine programming the events up until 2024. Throughout all that time, I had my own morning show, which is kind of an adaptation of Scott Adams' show, which was really just looking into persuasion, looking into what argument is going to carry the day. I run the mainstream legacy news through a Bitcoin lens and talk about what I think Bitcoiners are stressed about, worried about, thinking about, preoccupied with in the fiat world, and just try to track the change that we're all going through as Bitcoin and hard money finds its way into the soft system and starts changing it.
Money, politics, news commentary, social ability to digest those things. So I want to talk about, let's just jump in right there. So something I've talked a lot about is these technological revolution cycles that repeat on like this 50-year time frame, and how we're in one right now. And I think that AI and Bitcoin are both forming that up. And it's interesting to see sort of what Bitcoin has gone through and now AI sort of going through the same thing. For example, there was a lot of noise, a lot of opponents of Bitcoin because Bitcoin mining uses too much energy. Now it's AI data centers use too much energy. Right? Too much water. Too much compared to what? So we're seeing sort of like the Bitcoin network and the AI network sort of going through these growing pains as they sort of move through, as all technology does from the Luddites' perspective. So how do you see those two things seemingly on opposite ends, but a lot of synergy between those things, and how that's sort of changing synergy? How are you tracking that?
Well, don't forget, a lot of the Bitcoiners are setting up these data centers because Bitcoiners were the first to really understand this kind of real estate model of energy build out, which is kind of like the anchor tenant argument, right? So if you're trying to build a strip mall and you get a grocery store that puts a 30-year lease in your hands, you're going to be able to build the strip mall. So Bitcoin was the first to get into that with energy systems, and it ended up being Bitcoiners when the AI data centers needed to be built. I mean, you go and talk to any of the guys building them out in the UAE or in Texas. Very often Bitcoiners, you look at what they're doing at Crusoe, for example. This was a stranded energy play that is now a hyperscaler. This is the Chase Lockmiller organization, and he was a Bitcoiner from the beginning. So the synergy comes because it's the same business model. But I can even talk about it in terms of the let's call it consequential change. When Satoshi Nakamoto came out with cryptography, his Bitcoin version in 2008, 2009, this was the first time cryptographic keys had been put into people's hands, right? They invented public key cryptography in the 70s, but that ended up being just co-opted by corporations because you were too stupid to manage your keys. So they developed the PKI system, the public key infrastructure. And even, going back further than that, cryptography was really just a state actor operation. It was for war. It really wasn't for anything else besides that. So after World War II, when the original computers were invented, which were for cryptography, that's why we call them computers, right? They're not word processors. We don't call them that because they were used to compute big math and big numbers and were used in cryptography like the Alan Turing Enigma, Bletchley Park in the UK. So after World War II, that's why cryptography was counted as a munition. It was counted as a bomb or a missile, and it had, basically arms control around it around the world. So when Whitfield Diffie and Martin Hellman and Ralph Merkle came up with public key cryptography, it was the first civilian innovation in cryptography in hundreds of years since the Italian bankers. And what that ended up producing was a scenario where the companies then took over cryptography. So Bitcoin is the first instance where cryptography was put into individuals' hands. And this huge trickle down ended up creating Tether and ended up creating USDT. It created all these instruments because now cryptographic keys could be a US dollar. You got to think about what the money actually is. Is it paper? Is it a coin? By making cryptographic keys actually money, you're giving people the power of that cryptography, almost like math. That's why you hear about wizards and things like that. Now go and see what that leverage created by Tether and Paolo gave to someone like Trump when he got debanked simply for questioning the 2020 election. It was a don't trust, verify argument that he was saying. If you can't audit the elections in 2020, did we have an election? It sounded like an Ethereum transaction election. So no one bought it. And you didn't need enough proof that the 2020 election was stolen, right? And it was just like, can I prove it wasn't? No, so it's stolen. As Bitcoiners, we don't need any more proof than that. And that's what made Bitcoiners so attractive to Trump in the 2024 election, is that we had a worldview that didn't listen to political talking heads about the election. We didn't, on either side, I didn't have to hear Sidney Powell and her Kraken argument for how the election was stolen from Trump. We were able to just see there was no auditability. The whole thing is a scam. Now, what that ended up producing was this leverage that was created by Paolo and Tether and USDT and the early Bitcoiners and the psychological space that Bitcoiners were in. It allowed Trump to tap into that and bring a whole constituency into the forefront of American politics, thereby confirming Michael Saylor's bet, because he had already been suffering from fiat leverage and fiat manipulations in the sideways action of MicroStrategy in the stock over 20-something years with the stock buybacks and the inefficient fiat degradation of Wall Street and capital allocation. So that's where the story comes together. The AI data center story comes together with Bitcoin in terms of capital allocation. And you can see the human capital that's come to Bitcoin really predicted this, right? The cryptographers were the first, the Paolos were the first. The political people were next. Trump came around in 2024, but they were coming already in the 2012 Ron Paul reject failure guys that came out there and said politics aren't going to work. And then Wall Street came a little bit later, but you're seeing this happen in waves as it comes here. It was cryptographers. They had the power of cryptography. It was shared with political minds, political people. And then the Wall Street people came to it because the Wall Street people started to understand that the way fiat had denuded and denigrated and degraded Wall Street was taking risk out of the game. They made Wall Street into a porno. They made Wall Street into masturbation. There was no real risk. But a guy like Arthur Hayes, his company was, yesterday shut down, but this was a guy who wanted to fuck for real. He wanted to risk. He had to win and not win. Yeah. And so Bitcoin attracted the real hardcore Wall Street people that wanted to really bet. They didn't want to whack off. They didn't want to watch porno. They wanted the real thing. And so when you put the politics together with the markets and the power of cryptography, you end up getting almost a sovereignty stack. You can see it in the Tesla and the SpaceX IPO. You're seeing what pieces went into that, and you're seeing why the narrative was really so powerful around the SpaceX IPO, because you see the decentralized communications there with the satellites. You see the Bitcoin on the balance sheet. You see all of these things in that company, and you can see this trickle down. You can see what happened. It went cryptography, it went to politics. Michael Saylor had his Wall Street bet confirmed now that politics had aligned with the cryptographers, with this new elite class, and now you're seeing it manifesting in the most exciting company and narrative in the world. So that's where they come together. It comes together in fixing capital allocation in order to train investment on the energy build-out, which is what Bitcoin wants, which is what AI wants, which is not what the fiat Wall Street wants, but that's why Saylor made the bet.
If you hold Bitcoin, I want you to think about something just for a second. Not how you store it, but who gets it when you're gone. Most self-custody Bitcoiners have never tested if their family could access it if they were gone. Knowing where the keys are isn't the same as knowing how to use them. That's the technical side. But what they most often miss is the legal side. So even if your family found the keys and they knew how to use them, there's no legal structure telling them the Bitcoin is theirs or how it's supposed to pass to them. You see, Bitcoin that isn't properly retitled and documented could end up in probate. So it's not one problem, it's two. Yes, can your family physically access it, but is there a legal framework that says it's theirs? So if you want to find out, take a short 2-minute quiz and get your inheritance ready to score. Just go to unchained.com/Mark Moss. Again, that's unchained.com/Mark Moss. And it's definitely worth 2 minutes to find out that it's actually handled or not. So what you're saying is sort of like this this groundswell event, starting from the base layer, from the individual, growing up into eventually into the political and the Wall Street institutional complex. When you look at how technology reaches adoption, they call it the diffusion of innovation, and it has sort of like this bell curve, right? And so you sort of have like the creators and the early adopters, and then the early entrants, and then you have like the chasm. And the chasm has to be crossed. So there's something that has to happen in the mainstream psychology to now bring in that sort of early majority kind of thing. So is that sort of how you're thinking about it? Like, of course, like in the beginning, it was the cypherpunks and it was the cryptographers. But eventually it comes for everybody. Eventually, every government, every institution, every bank comes into that.
That's what I'm seeing. Now, it doesn't mean we're still getting almost a fork in humanity that we saw after 2020, and you're seeing it play out in Bitcoin right now. Like you said, we're in this chasm, and people bet on Bitcoin early. But if they're not in the minority, if they're not in the rebellious phase, they're not altogether comfortable with Bitcoin being kind of imperial, if you will. Bitcoin is both we were talking before we went live a little bit about Egypt, and it reminds me of the Hermetic principles, right? Hermes Trismegistus, right? It was sort of a worldview. And one of the ones that he had was there are no opposites. It's all just a spectrum, and that black is white. It's just a different scale of black or white. And I think of America and Bitcoin much the same way. They were both revolutionary. America was begun as a revolutionary force, but simultaneously it's an imperial power. They're contradictions, but they're the same thing. And a lot of Bitcoiners have a problem with Bitcoin becoming this imperial force. It is revolutionary, but it's also imperial. And so we saw a fork kind of happen in humanity, I guess you can say, around COVID time. There are some people that are not going to be able to get off of this credentialist top-down system. They're not going to be able to change the worldview. A lot of Bitcoiners thought that the Bitcoin revolution would happen from plebs just holding Bitcoin. COVID taught me that wasn't really a viable option. It goes back to that human capital frame I was talking about. Bitcoin infecting and changing Wall Street, Bitcoin infecting and changing the energy industry. Those are the two pillars of this modern world, Wall Street and energy. And if it can re-coordinate the balance between these two, if it can retrain capital allocation, if it can retrain the psychology of markets, if it can retrain the time preference, as we hear a lot from the Austrians, then you're going to have this recalibrated situation, and you're going to get a Bitcoin standard. And a lot of people are going to be left behind from this because it is simply too difficult for some to be able to cross that chasm. Now, I don't want to see people left behind in a barbarous way. I think there are ways to handle this and pay for it, which is why we're going to this bimetallic system. I don't think we jump right to a Bitcoin standard. We end up in a world kind of like what El Salvador has already, or what Argentina has already, where you have one money for consumption, one money for saving. It's the world that existed in America before the Federal Reserve was created. We had silver for consumption. The farmers conducted themselves with silver. That was the money of exchange, of consumption. And then the Wall Street folks had the gold. That's what really the Wizard of Oz is all about, right? The Wizard of Oz, the movie, has nothing to do with the book in this sense. The movie was 30 years after the book. The book was written in the time of McKinley. It was written in the time of tariffs. It was written in anticipation of the Federal Reserve being created. And so it is really a story about, it wasn't ruby red slippers, it was silver slippers on a gold road. And with Bitcoin now, we have a chance to use fiat like Argentina does with the peso for consuming, and they use the dollar for saving. You go to Argentina and you ask them how much they pay for their house or how much money they make in a year, they'll tell you in US dollars. You ask them how much this coffee or this Coca-Cola costs, they'll tell you in pesos. And so we have this bimetallic saving, consuming situation that looks like is imminent as we continue to move forward. It's what we see from MicroStrategy, our strategy. It's what more or less they're doing. It's what a lot of Bitcoiners, how they already live. They'll spend their money in dollars and save in Bitcoin. So that's how I see it. It's an inevitable human capital.
So in order to get this sort of eventual world where AI and Bitcoin come together, and then all the things that brings. So now when you have AI, which then leads to robots, and then you have autonomous bots that can have money, and all the things, the agents, and all the things that opens up, we can see that requires a ton of energy. And to this bifurcation that you're talking about, I mean, we can look back through history and we can see that the rise of energy use leads to economic growth. But back to the bifurcation, the Luddites of the world are still trying to hamper the growth of energy, specifically in the United States and Europe specifically. They can't even run air conditioning over there. I mean, the insanity over there, right? And so you have politicians and stirring up the public to come out and revolt against these things. So what do you think about that? But more specifically, what do you think about that? It appears that potentially maybe our adversaries are stirring that up. China potentially stirring that up in the press to get people worked up. Do you put merit into that? And how do you see that rolling out or shaping out?
Yeah. I mean, I think most of Europe's trouble is because, so I went to college in Europe, and a professor at the college I went to when the Ukraine-Russia war broke out actually came out and said in his investigation, almost all of the Greta craziness in Europe was actually all just Putin manipulation to get them so over the barrel desperate for Russian oil because none of their other stupid ideas were ever going to work, that it was a trap. So the way I see it, I guess, playing out is arguments aren't going to work here. This is not an argument. We're so entrenched in our worlds now politically in America that arguments aren't really the thing that works. The thing that works is going to be building and doing. Telling people we can finance energy, nagging them, yelling at them. It's like with Bitcoin. You can do it till you're blue in the face, right? You can tell people you live in a cartel of the Federal Reserve and nobody cares. The way to win is to find new ways to make money and new ways that are beneficial to people. And in this case, it is energy. And so the only way for America to solve this problem right now is to really embrace, and you've heard the messaging from JD Vance, you're hearing it from Trump, it is the American system. It is the Henry Clay Hamiltonian American system, which has nothing to do with the free trade British capitalism. It's not the same system. The system that they're looking at is taking American capital and training it and targeting it on specific industries that will bring benefit to people. Weirdly, so I live in Vermont as well, but behind me here you see Montreal. Montreal and Quebec, probably going to separate from Canada shortly. Montreal and Quebec are examples of the system that Trump is trying to build. Montreal and Quebec have energy abundance. It's as energy rich as Texas. Simultaneous to that, they have a sovereign wealth fund in Quebec of about $600 or $700 billion. And that money gets used for public works all the time. So we pay about 6 cents a kilowatt hour for electricity here, which is fabulously cheap. Yeah. And then we go ahead and build, they just built 100 and something miles of new subway track. And it was all funded privately by the Sovereign Wealth Fund of Quebec. Canada does not have this Sovereign Wealth Fund. This is a Quebec thing. So this formula of sovereign wealth and directed investments in things that will be beneficial to all of your society, like we have in Quebec, is what Trump is trying to build in America. This is not the old Chamber of Commerce, Republicans, government spending has to be low. Trump is not doing the low government spending thing. He's going to inflate the dollar. He's going to print. But the printing is going to go towards the building. It's not just going to go to NGOs or to people who are writing essays or books or art or culture. It's going towards things that are practical and useful for people. And one of those is going to be cheap electricity. If Trump doesn't get electricity down, it doesn't matter how many people like him. It doesn't matter how many people hate him. He will not be president and his party will lose. So they have one thing they need to do, which is to create energy abundance in America, to make the cost of living cheaper. And that's the race right now. That is the entire race. And that's the point of what's going on. So this American system, this Hamiltonian, Henry Clay, Besant-led Treasury system that you're seeing in America, that's subordinated the Federal Reserve. That's the important distinction of this Trump administration from what we've seen before, is that Trump is subordinating the Federal Reserve to the Treasury. This is the reinstallation of the Republic system. This is America being revolutionary again. This is that, we've had 125 years of America as a revolutionary state. It lasted up until McKinley was assassinated, and then we start seeing the track towards the Federal Reserve and everything we've experienced since. So that was the American 125 years. Then we kind of got the London 125 years, and that was the Federal Reserve and everything that we got with fiat. We're at the end of that 250 years now. And so when I talked about the Hermes thing of the oscillation between revolutionary and imperial, here we are again. And this is the leverage. Bitcoin is the leverage that's going to be used, that is being used to turn America back into this revolutionary force, to turn America back into something that is guided by the Treasury and not the Federal Reserve. And so it's going to be guided by the Treasury. It's going to be making investments in Americans' quality of life, such as with energy and public works projects, Hoover Dam type stuff. And that's where we're headed.
Hey, do you know that instead of sending your tax money to the IRS, you could buy Bitcoin miners with it instead? Here's exactly how I do it. You see, mining hardware is 5-year property. And under bonus depreciation, which was dying, it was down to about 40% last year, and it was going to zero, the One Big Beautiful bill has reinstalled it back to 100% and made it permanent. So I can deduct the full cost of the machines in year one. Now look, billionaires have run this play for over 40 years. They do it with real estate, oil and gas, rail cars, and it's the same provision in the code, but the only difference is what you own when it's done. So you see, I own the machines that produce the Bitcoin, but I don't have to do the work. Blockware does all that. Blockware sources the hardware, they secure the power, they run the sites, and my tax team, they structure it so the deduction actually works. You see, that's how I turn my taxes into Bitcoin. So if you want to try and do the same thing, check out Blockware today. To get started, just go to blockwaresolutions.com/market disruptors. Again, blockwaresolutions.com/market disruptors. Yeah, let's dig into that a little bit because it's something I've been talking about quite often, and I think it's extremely fascinating. When you think about making America great again, MAGA, and how polarizing that is, and what is making great again, and does that mean we're not great now, whatever. But to the point that you just said, like kind of going back to a previous era, and not just like pre-whatever, 10 years ago or 20 years ago, pre-woke or whatever. No, all the way back to a completely different system, as you said, the Hamiltonian system. Now, you talk about the sovereign wealth funds. Obviously, throughout the Middle East, you can see how well that's worked for them. And you mentioned, Hoover Dam. You can see how well it worked for us in the past. So when we think about returning back to that type of a system, a Hamiltonian system where the Fed is subordinate to the Treasury, which I agree with that premise. I mean, they're certainly working together. Fed is certainly accommodating what the government wants to do. But if we think about that, what does that mean, that Hamiltonian system, and then wanting to redirect it back into away from NGOs and back into building, turning credit creation back to the banks, as taking it away from the Federal Reserve? What does that look like?
Well, practically, starting with the first case study in this, or the first, let's say, hiring in this, it's the Fed chair himself, Kevin Warsh. Kevin Warsh doesn't come from the Jerome Powell world of I'm a lawyer, a compliance officer.
I'm an
Right?
academic.
Janet Yellen, he's an allocator. He writes checks, and he's there. People can say, "Oh, Kevin Warsh is there to follow the president's rule and the president's orders." Not exactly. The president's orders happen to be what his specialty is, which is VC checks being cut for fundamental change, like energy. He's written AI data center checks. So the first beginning of this is you have a capital allocator, not a technocrat, a capital allocator as the Fed chair. And so he's there to run a mission. It's his own mission. He believes in it, but it happens to be what Trump wants him to do anyway. So what it looks like next is you start hearing the massive leverage of the American government being used for these types of projects. You start hearing about, Trump's got all these ideas about what he wants to do with Freedom Cities, a contest, creating new energy. He created that whole opt-in regime in America for the AI data centers folks, where they have to build energy out. They can't use the infrastructure that's already there. They're not allowed to use the public grid. They've got to add to the grid by adding more energy. And that's what it ends up looking like is very simple. When you have government as the, when America decided to do its whole Triffin dilemma thing, get rid of the gold standard, go with the financialization, go with the London system. When you look at what happened in the 60s and 70s, manufacturing gone, there was no more impetus to build more energy. You go back and look at the hydro dams that they built in Michigan for Henry Ford. Henry Ford built the Red River, the River Rouge, or whatever they called it, dam to supply energy to Ford to build auto cars. Now, if you're not building, there's no one asking for this stuff to get done. So that's why the promise of Nixon, for example, the thousands of nuclear reactors we were supposed to have never got built, because you put it all into the hands of the government. The government was the only builder of electrical capacity after that. They were the client of all of the energy systems in the world, or in America anyway. And so because the motivating factor for energy build out was the government, they were the leader, they were terrible at it. And so we never got a nuclear reactor. We haven't had we had a reactor go critical 2 weeks ago or something. We haven't had a reactor go critical in decades. And so now that private industry is back and demanding more energy, they're going to figure out how to get it. And it's not being left up to me. Worst of all, the energy stuff was left up to municipal governments because it was sort of seen as a local thing. Wasn't even left up to state governments or federal governments. So worst of all, they picked the most backwards, incompetent level of bureaucracy in America to handle our energy build out. If there's anything more fiat than that, I can't think of it. Imagine we let the lowest tier fiat operators in the American system, the municipal people, the Mamdanis, the Karen Basses, they were in charge of electrical output or electrical grid increases. They're not going to do that. They don't know what they're doing. They shouldn't be asked to do that. They're not. They should be. It's the roads and shut up. So from there, that's what it starts to look like. It starts to look like a federal policy that is right now just voluntary, telling the AI data centers to build your own energy, but it's going to become mandatory eventually. As I said, I don't think Trump or any political party can survive expensive electrical bills right now.
Yeah. Well, I mean, a lot of people are against the data centers because, one, they use too much energy, two, they use too much water, and three, they drive electricity prices up. But none of those three things are true. And sort of like Bitcoin mining, they actually help produce cheap, low-cost energy. But
unfortunately, big tech in America are still Democrat people. They're still going on their political shop talking points. China's going to do it. No one's buying that. No one's buying that we can't, if we don't do it, China's going to do it and stuff. It's not motivating anyone. So one of the problems that exists in America is that big tech remains unwilling to cut checks on narrative, let's say, and that's what AI needs. It needs a corporate narrative. Like you said, it doesn't have the story. It's just, you're stealing our water, you're making our electricity go expensive. What they need to start being able to sell is a golden age. What do we get from abundant energy? What does abundant energy and cheap energy look like in America? No one's out there promising that. That's the answer. The answer is no. Build a data center because you're going to get cheaper energy. Once people start talking about the energy capacity being increased, we don't even want to hear about the data. Who cares about data centers after that? Their only mission, and they're gonna learn one way or the other that they have to get on that mission about energy abundance, because that is the actual way to get all of their AI data centers built in the end. They need to create more nuclear reactors, more solar battery type setups, more hydro dams. Wind sucks too bad to bother with this system, but there's plenty of options out there. You gas, coal, whatever you got. Let's go, burn it.
So as a master communicator and master of narratives, someone who's worked at the Senate Banking Committee, you said we need to have a better narrative, a better story. I might argue that nobody cares about their electricity prices going down, and probably nobody knows what their kilowatt per hour is right now anyway. So what is the master narrative that would sell this abundant future that you're talking about, this Hamiltonian abundant future?
I'll go back to what we saw with the SpaceX IPO. And don't forget, the SpaceX project down in Texas, right at the borderland type of thing, is also now a company town. It's like we used to have these in the old mining days, right? Company towns. And it used to be they paid you in their script, right? They paid you in their shit coins, and the mining times and the Wild West and all that stuff, the gold rush. But right there, once you see that he's been able to build a kind of breakaway society down in Starbase, Texas, and you're starting to see that as a kind of proto-Bitcoin citadel, if you will, you're going to start to see a lot of these communities gather around this energy abundance. And the people who don't want it, they're just going to live as Luddites, as you said. And so what we see down there in SpaceX, and of course, as you know, SpaceX, the whole thing was a narrative sale, right? They're not really going on fundamentals anymore. We're going on the narrative of what SpaceX is able to produce, what they will produce. And I'm with you. I don't know about living on Mars and any of that stuff. There's plenty of work here to do, but terraformation, so the thing they have to learn how to do, which is to settle inhospitable environments as other planetary bodies like the moon and the and Mars would be, they got to learn how to do that. The only way to do that is to start replicating what we already did with Texas. Now, Texas, when they figured out Spindletop, nobody lived in Texas till the 1950s when they invented air conditioning. You lived in Texas as a kind of a penance. It was like a penalty to go there.
Yeah.
And spend time there and mine.
Have you ever been to Phoenix, Arizona?
It's hot. It's hot. It's hot.
Yeah.
These places don't exist without air conditioning. Singapore doesn't exist without air conditioning. None of these places exist without air conditioning. So the way forward is to start manipulating our environment more, but now in colder places, in places that are inhospitable, not for too much heat, but for too much cold or wind or whatever the problem is. Because there's stuff there, there's reasons why we want to be there. So uncovering more of Greenland, for example, is probably where this all heads, right? Going up to Greenland, remember the American system of colonization is to go and build, and then the people who build it get it. The British figured that out really quickly. They hired in the Revolutionary War, they hired some German soldiers to come over as sellswords to come and fight the stupid George Washington rebels. And when they landed in Long Island and they took one look at the average American's house on Long Island, they said, we can't fight these people. What are you talking about? This is how they live? They're this rich and you want us to kill them? We're not. We're joining this side. So right away, the king understood he had a major, major problem on his hands because the American system was so attractive to normal people because they could get money out of it that they had to stop it. A lot of people believe, and now when I said we're reinterpreting history, since I found that out, I've understood, Marie Antoinette never said, let them eat cake. That never happened. The French Revolution was because the French were going to the American system. They were going to go on the same system. You build it, you get it. You go and build Phoenix, Arizona, that's yours. You go and build Chicago, that's yours. You go and build whatever, it's yours. That's how the American system works. You build, you get. It's not some financialization, colonialization thing. So the British understood right then and there with the American Revolution that the only way for this little financialized island to stay in charge of the world was the divide and conquer mechanism. They invented it right then and there. They invented it for France. And that's where you see this manipulation go into the Napoleonic Wars. Famously, the Rothschilds, of course, owned both sides of the market and bet against, Napoleon and Wellington. And many people know what happened as a result. They gained control of the London market. That didn't stop. They kept going. They went after Andrew Jackson the same way. Then they went after the Civil War. The British funded that. They never stopped the divide and conquer system. And This divide and conquer system is to prevent an American system from taking root and rewarding the builders. It rewards the dividers, it rewards the financiers, it rewards that sort of imperialistic extraction system. And so we're at the culmination of this fight. As I said, America went 125 years as the American system, and then finally was subdued with the German World War I. They were on a gold standard. America joined the fiat British, collateralize our birth certificates, create the temporary income tax, buy war bonds. It was the greatest war finance mousetrap ever invented. Germans had no hope. And we whipped their ass. And from then on, we were in this British system because it worked. It was it made us rich, right? That's all that matters in the end, I guess, for people's decisions. And so now we're seeing with what Trump is doing in Greenland. Greenland is America now. All he has to do is put a couple nuclear reactors up there and it's America. Who cares about the town of Nuuk and their stupid dental plans paid for by the Danish? The rest of it is open for business and is open to American colonization. I think NATO's already confirmed it. I think the brains of these people just can't accept that it's already America, but you'll see the maps change soon enough.
Okay, so I got to tell you what I've been doing with my money lately. I moved my cash over to River, and before you ask, yes, I still pay all my bills in dollars. Everything works the same, but here's the real difference. You see, River pays me 3.3% on my cash, and they pay it in Bitcoin. So my money that was just sitting there doing nothing at all in the bank, it's now stacking Bitcoin while I sleep. And I started thinking, like, my bank takes my deposits, they loan those deposits out, they make 12, 17, 24%, and they pay me 0.04%. I mean, honestly, that's kind of a shakedown when you think about it. Now, River's FDIC insured, they use full reserve, they charge no fees. So I don't know why I didn't do this sooner.
So click the link down below and get $100 in Bitcoin just for getting started.
You talked about the divide and conquer, and you start looking at like the types of people in the world and dividing them in half, if you will, right? And it's like you have the creators, you have the consumers, and you have the fighters and you have the pacifists. And so like from a creator lens, someone who has built and sold companies, and with my fund, we fund private companies. I see the vision, I see the build plan, and I see the abundant future that creates. Unfortunately, on the other side, we have the takers. Elon Musk has been calling that out, right? The makers and the takers, the Bernie Sanders, who have never created a single dollar of economic growth in their life. All they want to do is take. My fear is that as optimistic as I am, and it sounds like you are as well, and I can see the path to this abundant future, the rise of the takers seemingly is rising pretty quickly around the world. I mean, you mentioned Mondami earlier, taking the crown jewel of the United States, if you will, and now quickly appointing many other people. The DSA party sort of taking over the Democrat Party pretty quickly here. So what do you think, how do you see that battle shaping up? And do you think the draw to abundance is going to be too powerful and overwhelm that? Or, what percentage chance do you give to these takers of stifling that?
Well, in most countries, I would say pretty high, but America is different. We've seen this stuff, maybe not so much before, but go back and remember the Weather Underground in the 1968 presidential election. Americans turned against that kind of violence. Now, it doesn't look like, things have gotten much worse this time around, if you will. So, and it is spreading quickly. A wealth tax 10 years ago to Americans would have seen 95% would have said it's communist. We're at like 60-40 now or something like that. So that's a big change, right? It's a very big change, mostly as a result of the
immigration,
the weapons grade psyops that are being unleashed on the American mind every day, right? On all sides, just the constant slamming, manipulation, nudging, urging, prompt engineering, right? That's in the end one of the things I've learned from AI. People at the remember when AI came out and everyone's like, when is AI going to beat humans? We're so smart. And I was like, wait a minute, hold on. How smart are we? And now that I see how easy it is to prompt engineer people, if I say patterns 369, you can't stop yourself from finishing it. That's human nature. So all of us are susceptible to prompt engineering. Trump, that's all he is a prompt engineer of humans. One of the best we've ever seen. He's a prompt engineer of humans. He looks at a bunch of humans and types in the thing, and then they just do what he wants them to do. It's an remarkable skill. So everything is coming down to persuasion in the end. It is a persuasion game now. Money, we've taught money for a long time in terms of math because there's numbers. There's not numbers really that are important. It's psychological. US dollar is a psychological commodity. Bitcoin is a psychological commodity. And so the type of world that psychological commodity is able to build is in itself attractive or not. I think we're in control of our own destiny here in the way that, you hear about a baseball magic number to qualify for the playoffs or something. If we build, we win. If we don't build, we lose. And if we sit around arguing about Trump or this or the, even the culture war stuff, like I don't care about Ulysses and he's got a black, whatever her name is. And, like it's a waste of time. So no, I don't, I'm indifferent to it, but wasting all of your energy on not building, wasting all of your energy on fighting wars that are going to be decided by wealth versus poverty anyway, not by arguments. We're not in a world where people are like, oh my God, now that you say that, I realize I'm wrong. No one thinks like that anymore. So you persuade by building, you persuade by, you hear it a lot that politics are downstream of culture. Well, culture is downstream of money. And so if you fix the money, you can fix the culture, and that can fix the politics.
When you say fixing the money, does that mean like going back to Bitcoin, a Bitcoin standard, a sound money standard, or is that like way too far off? And so when you say fix the money, it's like, well, let's just fix the current Fed regime and push the money back through at least through private businesses and through private banking, and then eventually we get back to the sound money. Is that fixing
I don't think we can make a jump to a full Bitcoin standard. It's just too violent. It's too rough. It's too. I don't think many people have the stomach for what that means. That is a depopulation event, I think. And so the most humane way is a type of UBI for the sludge people who can't keep up. I don't want to kill anyone, right? But some of these people aren't going to be able to change their minds. Like I don't want anyone to die. But how are you going to make? How are these journalists that are snickering at Elon Musk going to make it in the future? There's no job waiting for them. And so how do they make it? I mean, I do think we are headed to a type of the fiat money around the world asked to be one thing. It asked to be public policy money, government word money. And so they're going to get what they asked for. They're going to be public policy money. It's going to be designed not to pay bureaucrats anymore, but to fund the lifestyles and consumption habits of people who simply can't adapt to the change. And bimetallism, this dollar Bitcoin system, will last as long as that system lasts. Eventually, I do believe we'll be able to, I guess you could say, discipline markets and sort of purify markets in a sense. We don't want the best and brightest to be on Wall Street anymore. That's something we absolutely need to change. The main problem right now that I see with fiat is that the best and brightest will do whatever job pays the best. Doesn't matter what. And if you do 80 years of financial engineer as the highest paid job in your society, what are you going to get? You're going to get all the highest IQ people in one part of the room. And what did that do to everybody else? I don't care what the best and brightest do, but in this case, the consequences of them being in the markets have meant that every single other person has to keep up with their IQ. And that's asking too much of a blue collar guy. He should be able to save money and be good at his job. And putting all the high IQ people into one corner and telling them to work on Wall Street because you'll get paid more created this problem. So we still will have a Wall Street. It just has to be completely shrunken in size and importance. You need people who really understand the meticulous nature of yield and return on investment, not just this, can I get some cheap capital, throw it. Can I get more cheap capital, dump it there. That's the strategy we have now. And that's a fiat strategy. It's not going to work going forward. So this bimetallic system will focus on the builders by rewarding them and will keep the sludge people and parasites alive to see how many of them can evolve, When
you think about this path that you're talking about, fixing the money, and the problem of this financial engineering sort of left people out, and the fact that they can't save in their own money, which of course we think that sound money, Bitcoin can fix that. But in the meantime, how do we get from there to here to there? So the stock market has been that place for the average person to sort of just throw it in the stock market. The S&P 500 sort of rises with the rise of money, with the money supply, et cetera. One interesting thing that we're seeing, And I'm curious your take on that, because there's bills that were passed from the new Trump administration, the Genius Act, the Clarity Act that's being held up right now. But a lot of those were about stablecoins, the digitization of money, and the ability to tokenize shares. And so I see this change happening where we can already see that public companies are dwindling. Like less and less companies are going public today. Sam Altman said that we'll now start seeing billion-dollar single-person businesses. So now we're starting to see the rise of these AI companies that are growing to be hundreds of millions, billions of dollars with small teams, 10, 20, 30, 40 people. And it's starting to happen much faster and faster today. Those companies don't appear to be going public. They're staying small private companies. And back to your point of attracting the best and brightest, and I see a lot of growth in that area. I see the public stock market already having less participation. I see the rise of these companies, and seemingly a lot of the best companies are staying private. Now, that leaves out the Joe Sludge people you were talking about, because they can't just chip their money into the stock market and participate in this growth, because now the companies are private. That leads to a problem that seemingly potentially some of these Genius Act, Clarity Acts could potentially solve if we could get some of this tokenization through, right? If these private companies could tokenize and some of the assets that they own could be tokenized, would that bring liquidity back for these Joe Sludge people that can't participate in this? I mean, are you looking at these bills as part of this transformative process?
Quick question. How much control do you have over your money right now? Technology's changed everything, and now it's changing how money works. Crypto started as a niche, but now it's going mainstream. It's faster payments, more control, fewer middlemen. This isn't hype, it's just where things are going. And getting started today, it's easier than you think. With a Rumble wallet, you can buy Bitcoin, you can hold dollar-backed stablecoins, you can even own digital gold backed by real gold, and it's all in one single place. It's a non-custodial crypto wallet, which means that not a bank, but you hold it. Not a bank, not a platform, you controlled access to your funds. The setup's super simple. It connects with MoonPay, so you can use your debit card, your credit card, your bank account, and you can be up and running in minutes. And for a limited time, you can start your wallet with $10 in US stable coins by downloading the Rumble wallet and entering my exclusive promo code MOSS10 when you sign up right now. You can even use your Rumble wallet to support your favorite Rumble creators, maybe like me, directly. So do this right now. Scan the QR code on the screen, click the link in the description, or go to wallet.rumble.com/moss and download your Rumble wallet. Now from there, you can set up your wallet, enter promo code MOSS10 to get $10 in US stablecoins, and this is a limited time offer, so you gotta do it right now. But take control of your money. Get started with Rumble Wallet today. Of course, terms and conditions apply. See the description below or visit rumble.com/promo-official-rules for details.
Yeah, I think so, because even today, access is a problem. I mean, you go look at all those A16Z guys who get included in every round early. How are you going to beat them? Like, no one could compete with that. They get everything free instantly all the time. So I go back. You ever heard of this guy Ronald Coase? Long dead now, but he won the Nobel Prize a couple of years ago in economics. He won the fake Nobel in economics. But he was a lawyer, actually, had nothing to do with economics at all. And I always anticipated he would be a big deal in Bitcoin. It hasn't quite happened. He lived to like 100 and something years, like 110 or something, crazy. So he's known for this. It's called the theory of the firm. So why companies exist in the first place. How did this happen? What's going on here? And it comes from law. You know, you take pure law. It's a noise complaint, right? You're making too much noise. I'm complaining about it. We go to a judge. The judge comes right down in the middle. He says, you, to me, don't worry about it if it's before 10 o'clock at night. You don't have a right to complain. He's going to go to you. Shut up after 10. We're all going to walk away happy, right? So Coase theorem starts with that premise. That's the law. That's how it's supposed to work. What ended up happening was, and this is what, it was like a 7-page paper he won the Nobel Prize for too. It was called, basically the theory of the firm is transaction externalities create this situation where the company grows and exists. Now, what it does is instead of hiring a lawyer each time they have a noise complaint, they just have an in-house lawyer. They just hire a lawyer. And then that's easy. Anytime there's a noise complaint, send your lawyer. You don't even have to bother with it. And then, yeah, I'm even annoyed by having to send my lawyer. So why don't I hire a lobbyist? And the lobbyist is going to go change the laws. And then suddenly you see the imbalance. So his whole point was that the ability of the system to corrupt the system The ability of the system to be corrupted is what helps grow these companies. More transaction externalities, more people getting involved in simple acts. So what I like about tokenization is it does exactly that. You don't need to use other people. You don't need to you don't need to hire a professional to tokenize. You just hit a button and it goes. And so when you shrink and keep the company that small, you stop hiring the lobbyist, you stop hiring the lawyer, you stop hiring all these other things. And we've seen this trend over time. Like the biggest companies on the S&P 500 have shrunk every decade for 80 years now. I get, the average people in the company, top 10, whatever. And as they said, you're going to get more. And indeed, I think you're right about that, because once you get rid of all these other people you have to take care of in the company, you can actually start now cultivating a relationship with your clients, with your customers, with people who really believe in you. You're shrinking the distance between you as a moral, a company is a person, because that's what he was arguing. Like, how do these people that are companies grow to be so powerful? Because that's what we call them, right? They're called moral people. In order to take obligations and responsibilities and be in a contract with a person, it has to be a person. Only people can be in contracts. So when you start limiting all of this corporate architecture and all this need for more externalities, theoretically you get to a point where the friction is gone and you can start having this synthesis that I don't think is IQ dependent. I mean, plenty of people can say and have ideas, that business is going to work, that business is going to be great. They just don't even know how to invest in it now. This is going to make that a lot simpler, I think.
Yeah, there's no access. And that changes the access. And so as the market changes, bills like this become very important if Joe on the street is going to be able to continue to build that wealth until we get to the sound money phase. Of course, anyone can just buy sound money right now. You can buy gold or Bitcoin today. You don't have to wait for the whole system to change. That's a big piece of it. Yeah, all right. That's something I've been thinking about quite a bit, how that changes things. What's interesting is that I'm sure you're an avid user of AI. I mean, I'm in it all day, every day. I recently built up the Karpathy LLM wiki. I don't know if you saw that going around. So I built that up, and that was like this huge unlock. And now I'm running this Gary Tan G-Brain. Have you heard of that?
No, I haven't seen it yet.
Okay. So you mentioned prompt engineering, right? And so AI was all about prompt engineering. This is who I want you to be. This is what I'm trying to do. Here's the context around what I'm asking, right? And you're giving it this prompt. And the problem is the context, right? So if Joe Blow walked up off the street, and is like, hey, Nolan, should I sell my business? Like, you have no context to answer that question within, right? And so even if I give it a long 10-minute prompt, it's still not enough context. So now the new phase is like, how do I give the AI enough context? And so now when you create the second brain, so like the G brain is the one I'm running, and it is like the biggest unlock. I've been running for a couple weeks now.
I mean, it is like, because I'm struggling with that. Once you give them too many prompts, they become
okay.
So
so forget the prompts. Prompts are done. So you could just look up the Karpathy, who was the founder, I think, at Claude, and now he's at OpenAI. But he created the LLM wiki. You can go on the GitHub, throw it in the Claude code, it'll set up for you. It's a 20-minute setup, easy. The G brain is a little bit more in depth, but it's way smarter. But the point is it has the context of everything. So all my Slack messages, my Notion, all my Zoom transcripts, all my email, like everything goes in there. It has context of everything. And then I can use any LLM I want. I can jump from Claude to ChatGPT, whatever, and it doesn't use that for the context. The context is in my brain. And now with the new models, the Fable on Claude and the Soul 5.6 on ChatGPT, because they have so much bigger context windows, tokens, and now they have all the context, what you're able to get out of these things is just mind-blowing to where it was even just a few months ago. Like, it is like a whole nother level. And anyway, the point to that is that like this is all happening so rapidly. And the AI agents piece specifically is blowing out. And I just referenced that because when we think back to the rise of AI and Bitcoin and stable coins as a way for AI agents to make payments and things like that, I think the average person isn't prepared for the explosion of growth there, because when we saw previous technologies like the internet, for example, old people were afraid to put their credit card in. Older people are tech adverse, right? So it's really hard, back to that diffusion of innovation, it's really hard to get people to start using it. But the demand for this stuff is coming from the AI itself. The AI agents are the ones demanding the stablecoins or the Bitcoin payment rails. They're the ones that are demanding the more energy, et cetera. And so that is going to grow things faster than we've ever seen. And so I think the rate of change that we're expecting to see is faster than most people can anticipate. And so when we think about that from a market perspective, well, both, as you said, the infrastructure build out, the demand for the energy, but even going back into the Genius Act and the Token Act and things like that, like it's going to change pretty quickly. It's going to change faster than most people think. Like I said, where I'm at with what I'm doing on AI today compared to where I was even just a month ago is like a light year. I mean, it's insane. So
I'm not planning on, the way I think about it is all of the, more or less what we think of as jobs, everything probably has another 3-4 years left maximum. I'm just guessing that seems like I'm being prudent. But I'm optimistic because when I look at what jobs are going to be next, if all these jobs are all the laptop jobs, all the email jobs, everything, even Wall Street stuff, the jobs that we're not good at anymore are still waiting to be filled. Mother, father, brother, sister, wife, husband. We're terrible at these jobs.
Yeah.
We couldn't be worse. And these jobs are waiting to be filled. And this will go a long way towards solving the division in America. Just having a brother do his job really, or a sister do their job really. You know how many sludge people that could save? You know how many people in America just need one person to be like, hey, this is all a bad idea.
Yeah.
Right?
Yeah. Well, Nolan, we have many times talked for hours and hours and hours. We can keep going, but let's wrap it up. Let me ask you one last question. You seem to be an optimist like I am. I appreciate that. I think Elon Musk said, I'd rather be an optimist and be wrong than a pessimist and be right. And because the builders, you have to be optimistic or you don't build, right? But anyway, So what's one thing you're most optimistic about for Bitcoin and sort of this greater sort of tech build out over the next, call it 18 to 24 months?
I think that these citadels are going to come together, believe it or not. I look at the proto-citadels that we have in America today. I think of those as the pub key. I think of those as the Bitcoin park. I think of Bitcoiners coming together to spend social time in a kind of breakaway society-ish thing. We see it at Bitcoin events a lot, but the Bitcoin meetup culture was this from the beginning. I think that these Bitcoin proto-citadels, you see what they're doing in Lugano with Plan B. You see what's going on in El Salvador. We got another one in Tokyo. You got one in Thailand. You got one in Singapore. San Francisco has Presidio. Space in Denver. So that means, we're at 8 or 9 in America. We're at, I don't know how many in the world. And then you mix in the SpaceX city, Starbase, and then you say to yourself, wait a minute here. Trump's doing a Freedom City contest before he leaves office. He's been talking about this for a while, about building 10 cities on federal land. And you put all that together, and I think within the next 2 years, let's say, you're going to have the full articulation of the Bitcoin American golden age really put to people. SpaceX is a bit of a company town. It's not quite there. It's not deliberately Bitcoin. I don't think you need to shoot rockets into space in order to have a Bitcoin citadel. But again, just this idea of building an energy system, paying for it because of the real estate type model, and then watching a kind of culture form around it of builders, of real builders. Again, go back to this explicit American system that I was talking about in Greenland and the Wild West. You build it, you get it. That's not the British extraction system. You're not reporting back to the Home Office about your findings and returns on the colony. You're building the colony and it's yours. And so that ownership and that direction, and seeing Bitcoiners, if we get the kind of step up that we imagine happens in the next cycle, you're going to have more than just Paolo who's going to be able to pay for his own Bitcoin city. And you got a Trump contest going on in America. We got a lot of land. We're not rebuilding Mamdani's New York. I mean, it's one of the disappointments I get. I lived in New York City during COVID and, ran away because of the George Floyd thing. But I still remember, because I didn't care about COVID. I was walking around the city doing my thing and it was just empty. And I remember saying to myself, this would be a great opportunity to fix New York City. You listen to the Manhattan Bridge and the noise that comes off of that when the train crosses it. Like it's the loudest, stupidest outdoor industrial revolution, 1800s infrastructure you can imagine. New York City's a 19th century city in many ways. Forget about the skyscrapers. I said, maybe we take a break and rebuild New York. That was just before George Floyd. After George Floyd, I said, you know what? Maybe we're not rebuilding this thing. Maybe we're going to build new cities. And so I'm at that point now where I don't think the next thing in Bitcoin is an argument. I think the next thing in Bitcoin is someone building something that is so amazing that it actually lets people know what the future looks like more than any argument that could be made, any book that can be written. And it begins with farming and energy and family-oriented Bitcoiners breaking away from society and building something we haven't seen in over 100 years in America, a new city in a new place that was inhospitable and uninhabitable before, a reemergence of a kind of Texas or Arizona or something like that in a place that is inhospitable now.
Yeah.
And so maybe it's Greenland, maybe it's the desert. I don't know where it is, but Bitcoiners are going to build something that is the future. In the way that Starbase and SpaceX are the future today.
The sovereign individual thesis playing out in real life. Well, that's a good place to wrap it up, Nolan. Like I said, we could talk for hours. I love talking to you. And you talk every day, I think, right? You're still doing your morning show every day. Where can people go follow you? Where can they go follow your work and keep up with you?
I took a little break over the past month. We had a few changes. We've shut down most of Roxham TV. I don't know if you heard about that. But I was working with Roxham for the past little while, but we shut down most operations at the end of June. But big things coming. I'll let you know. We've got new show starting next week. I'll be on Simply Bitcoin next week. And one other big announcement coming, but I can't share it quite yet. But I know a little more about Citadels than most people, put it that way.
Good. All right, we'll wrap it up with that. Thanks so much, Nolan.
Welcome. This is BFC in NYC, the premier institutional Bitcoin adoption event. We are here with over 300 decision makers from across the industry. We're excited to welcome you, and let's get into it. So the people in the room are what makes today an incredible event. The top companies who are allocating Bitcoin to their balance sheet and leveraging Bitcoin to run their businesses are all in the room, having conversations and making deals happen. All the decision makers from across the Bitcoin ecosystem who have anything to do with corporate adoption, institutional adoption, are in the room here at BFC in NYC. Thanks for coming, and we hope you enjoyed the event. We'll see you in Hong Kong.
Bitcoin for corporations, in my view, is just starting. This is going to become the largest and most important corporate organization on earth.
Everything you guys do, Bitcoin for corporations, is so high quality.
Bitcoin for corporations brings together, my types of folks. They love Bitcoin and they're interested in merging the two together for the benefit of both.
Well, it's Monday morning and it's packed already. So the energy is fantastic. I think for BFC specifically, it's our first year being part of BFC, and I'm quite excited for today.
Being here in person, you get to meet folks that are launching products that instantly have implications for your own business.
There's nothing quite like meeting people and communicating one-to-one, reading the body language, seeing their faces, getting the energy, and being able to have rapid conversations back and forth is really, really key, and you can feel the difference.
For me, these events are very informative from a data perspective because I can see the landscape.
This is where you find your investors. This is where you find your best partners for Bitcoin capital markets. The best meetings between traditional finance companies and Bitcoin companies happen in Bitcoin for corporations symposiums.
We are pushing the forefront of Treasury strategy, and I think BFC will become a coalition of some of the wealthiest companies in the world.
Bitcoin for Corporations may be the highest quality professional association in the digital asset space.
Welcome. This is BFC in NYC, the premier institutional Bitcoin adoption event. We are here with over 300 decision makers from across the industry. We're excited to welcome you, and let's get into it. So the people in the room are what makes today an incredible event. The top companies who are allocating Bitcoin to their balance sheet and leveraging Bitcoin to run their businesses are all in the room, having conversations and making deals happen. All the decision makers from across the Bitcoin ecosystem who have anything to do with corporate adoption, institutional adoption, are in the room here at BFC in NYC. Thanks for coming, and we hope you enjoyed the event. We'll see you in Hong Kong.
European institutional investor base is massive, obviously, but also very fixed income focused. European fixed income, it's very much fixed income culture. You got all the massive pension funds, all heavily weighted towards fixed income instruments. Kind of hard to get yield right now. I mean, I was in high yield credit for a long time, and high yield credit is basically very low yields these days. So I think that in itself is a big opportunity set.
Think about the scale of AI. How is AI going to use this? People just think that AI is just going to use it to pay. But what is AI? What do robots need? What do people need on a global network? A true extension of the internet. AI wants to use it for validation, authentication, accessing data, and they need to have it happen at the blink of an eye. In other words, money, which is trust, especially for agents and robots, needs to move at the speed of intelligence. You're not going to get that with Visa and MasterCard, but you're going to get that by being able to send, 1/1000th to 1/10,000th of a penny working sats with the blink of an eye to validate. And effectively, the Bitcoin address that they can validate that they have becomes the agent's agentic soul.
But again, Bitcoin can and will only ever be that safe haven in those types of environments if Bitcoin is viewed by the masses, by traders, as a currency. And unfortunately, we've kind of, as Bitcoiners, shot ourselves in the foot a little bit by calling Bitcoin digital gold a digital store of value, rather than calling it what it truly is, the most perfect form of money that humanity has ever conceived.
Digital credit has not yet seen a full maturity cycle yet. It is under stressful situations that the true test of the market really would happen, and that has not happened yet.
For the first question, when we say digital credit, what are we actually describing, and why is it becoming an important part of Bitcoin's capital market right now? And maybe start with you, King.
Sure. I mean, if you look at Strategy, which obviously has developed the whole space for us, they've gone through this evolution of credit instruments, starting with margin loans, which were a great instrument in 2022, then convertibles, and then trying a number of different pref securities, really ending up with Thrive, which obviously Saylor calls his iPhone moment. And at its core, it's basically a Bitcoin Treasury company has a pristine asset on the balance sheet, Bitcoin, and issuing credit against it. I do have to say that there are clearly a couple of, call it, definitions which are somewhat hybrid, because when you say digital credits, the pref securities are technically an equity and they pay a dividend, which is not the feature of a credit instrument. So I think there is some of that probably also in the market leads to sometimes a bit of called confusion, call it. But as we're developing the space, I think that's key to clarify some of those things. But clearly, why is it important? Because it allows essentially growth of the ecosystem, and for credit investors who have a different risk profile to access, in a way, Bitcoin, and for those dollars to go into Bitcoin.
And I think yeah, if I could just add, I think they're particularly relevant now, right? Because as MNAVs have been shrinking, so the premiums are getting compressed. The ATM isn't working anymore, so just issuing more equity to raise money isn't working. So digital credit is a way then to raise it another way. Rajiv?
I can share and I agree with both these definitions, but I think I have two definitions. One is, of course, the usual one. For us, digital credit is where institutional debt is being settled on chain, which is happening a lot. But I think the definition that would be more relevant for the theme of this event and conference is digital credit would be debt where an unbacked crypto like Bitcoin is literally doing all the work as collateral, or as an exposure or as an economic exposure on the balance sheet. And it's important to understand how these two different types of definitions are recently starting to integrate with each other in a way where Bitcoin is being used as collateral for more institutional kind of assets. And one of them is the recent example where Moody's did assess and rate the Bitcoin-backed muni bond out of New Hampshire. And it's important to highlight that on one side, you have this highly volatile speculative asset like a Bitcoin. And then on the other side, you have this most conservative vertical in the financial space, muni markets, and how they both have come together in this issuance where the structure is what was underwritten, not really the collateral, and the over-collateralization of Bitcoin with proper triggers and liquidity triggers put into place, thereby offering the relevancy and the rigor of the institutional finance space, allowing Bitcoin to become more institutional. And that is one kind of an example, along with a lot of other digital asset treasuries, where Bitcoin is being bought and held on the balance sheets, and the treasury strategy is the digital asset treasury strategy is about finding ways to generate yield and liquidity using that static asset on their balance sheet, which is sitting in a cold wallet somewhere. So I think the strategies are evolving as well. And as more and more institutional and crypto worlds start talking with each other, maybe Bitcoin as a collateral, that will lead to more and more digital credit being used as institutional capital and also allocation of capital in the institutional space using crypto assets.
That's a perfect segue into our next question, which is really about who is digital credit for today, and where is it going to go in the future? Is it primarily a way for Bitcoin native investors to seek income, or a bridge for more traditional institutional investors who want exposure to Bitcoin linked economics without taking on the full volatility? Although recently we've seen quite a bit of volatility.
I was just going to say, I think both really, and I guess that's the point. I mean, I think for Bitcoin natives, they're getting an income. They're actually getting something, and not without actually having to sell any sats. They're still betting on the power law holds, like the power law, similar to what we saw in the keynote this morning from like with the 200-week moving average and those bands. We're betting on that the price is going to at least stay within those bands, but reducing volatility, right? So we're basically placing a bet that the price is broadly going to go up, but we're not going to suffer that same volatility as if we were following Bitcoin directly. And I think for the institutions, then they're getting some Bitcoin exposure, but again, at not at the crazy kind of volatility that would otherwise scare them.
King?
Yeah, maybe to add, obviously the yields being offered by, for instance, Stretch and SAYLOR are much higher than you can get in traditional financial fixed income instruments. So for institutional fixed income investors that are yield hungry, I mean, clearly you have a very low rate environment in Asia and Japan, but also in Europe, it is an attractive instrument. So you got to have an institutional investor that's comfortable with that exposure and that risk, but also looking for higher yields. And I agree, at the same time, it is also for retail a large instrument. And I like to think that's a combination of existing called investors that already have exposure to Bitcoin, but maybe also getting some new ones in that want a lower risk profile, and maybe over time graduate to also owning Bitcoin outright or treasury companies outright.
My take would be two types of audiences, and I think they were both covered. One is, of course, the Bitcoin native audience looking for capital efficiency, which they get if they try to find alternative ways to generate yield, which King said. And the other one, which was mentioned earlier, is the institutional side, where they get exposure or they can invest in Bitcoin without directly holding spot BTC, or even getting exposed to the direct volatility of the Bitcoin as an asset. So they would rather prefer doing that, which writes off the risk, but they still have access to the Bitcoin. So absolutely agree with both those points. And from a credit perspective, I think both those aspects are very important to look into. Of course, for us as a credit rating agency, we look at the institutional aspect more than the blockchain, the Bitcoin native one. But how the Bitcoin native audience or the exposure impacts the institutional side is equally important now.
It was reported in the last strategy earning calls that I believe 80% of Stretch holders are retail, and the question that came to mind for me is, what is it going to take for larger pools of capital, institutions, to really dive into digital credit head first in a serious way? Is that track records? Is it ratings? Is it standardization, liquidity, disclosures, education? What is it going to take?
Go ahead. Maybe quickly, Coffee. Thank you. So I think it's a combination. Certainly, all the elements that you mentioned are very important. We've clearly seen some stress in the ecosystem in the last week. So cash reserves will be important. Track record, how it develops. But I think at a broader level that this turns into an asset class, because once it becomes an asset class, it becomes unavoidable to invest in. At the moment, it's really two products, right? Again, Stretch and SAYLOR. But the moment you have an asset class and you have a number of swaps on it, derivatives, people can trade the curve, different issuers, currencies, then it becomes really, really investable for a very large pool of capital. Even though 10 billion is fantastic for Stretch, it's obviously still quite small in the whole income scene. So I think, to me, we're still the first innings of this asset class developing, literally a year old, really, and we need to build it in that sense.
I was going to say all of that, I agree, but if I were to rank them, it first would be standardization, which I think is very important and missing in the digital finance space across the board, but also in the crypto world, like Bitcoin and other unbacked cryptocurrencies. And the way and we as a credit rating agency think that credit ratings can standardize some aspects of the ecosystem, because a lot of credit committee discussions at institutions are driven by the credit assessments of the assets that need to be allocated. And that's why we think if we are able to somehow integrate with whatever blockchain the assets are being issued and be able to provide credit intelligence directly embedded into the asset or on the blockchain itself, that will solve a lot of these decision-making issues that probably some institutions are seeing when it comes to allocating capital in the digital space. And we are probably currently the only one that are able to integrate with Canton Network, Solana, and we are scaling that because of that very aspect. But also, I think what is important is the lack of history right now in the space. And what I mean by that, the track record, besides everything that you listed, is because the digital credit has not yet seen a full maturity cycle yet, because it is under stressful situations that the true test of the market really would happen, and that has not happened yet. So as we see digital credit evolve and that maturity of the assets and assessments with credit associated with them and the capital being allocated and how under stressful situations they stand, that test is going to be the real driver or the real solution to then understand what kind of digital risks that we were looking at and should be looked at in addition to what we have, and what other guardrails and frameworks need to be built in order to avoid those kind of situations which probably happen in the market. So that one track record is also another piece that is very important and is currently missing, but that will only happen over time and can't be just made up because we need one.
The stressful situation, I'm not sure if I can take another one like the one we've been having for the last week. I think also I would add to both your points there, also education. Right, we're seeing half the market can't even distinguish these things between stable coins or Bitcoin proxies. So we're trying to help with that, to help educate the market, explain what these instruments are, how they work, provide tools, simulators, so you can sort of simulate what will happen according to different events of the company that's backing them and so on.
Amazing. Going back to the idea of risk, how should investors be thinking about the risks of these instruments, both on the Bitcoin side and the issuer side? What are the most important things that they need to understand and evaluate before potentially investing?
I would begin with coverage, right? So can the issuer, do they have the ability to pay the dividends? What are their fiat reserves like? Their Bitcoin reserves, if they have to go for that? If they start eating into their Bitcoin reserves, what's going to happen? Do they have an operating business that can support the dividends? So yeah, finding out like the financials of the company and their ability to cover. I mean, when you're buying, say, MSTR, you're buying an equity in a treasury company. You're betting that Bitcoin is going to go up. That's basically what your bet is about. When you're buying Stretch, then you're betting that strategy won't fail, right? So long as the company manages to keep going and it can serve its dividends, then you're good.
I mean, from a credit risk perspective, I think one fundamental doesn't change is the quality of the assets and the segregation of those assets. In a bank remote account as well, that's very important and the safest way to look at how the structure of the asset is then built on top of that. The second most important part is the legal enforceability that needs to be linked to the token version or the crypto version of the asset as well. So if it's an unbacked crypto like Bitcoin, it's also important that if you are currently holding a claim to a specific Bitcoin or a spot BTC or something else, does that claim actually stand in court, or you can assert it in a court of law? And that's really not been tested either. So the legal enforceability from a credit view is very important. And then, of course, governance mechanisms, the new mint and burn mechanisms, smart contract controls and designs, and the other technology risk, platform resiliency, the regulatory aspect, everything comes into play with that. But those are some risks that need to be evaluated from a digital credit perspective. And of course, I'm talking from an institutional debt, but that would also apply to a more Bitcoin native treasury or an asset class where we have to look at the collateral aspect and the legal enforceability aspect for sure.
Maybe one thing to add is if you look at digital credit compared to gold standard credit, TradFi credit, obviously the big difference is the volatility of the underlying asset class. And I think most of the digital credit issuers so far are also sized correctly, right? They have very low leverage, 10, 20% at the current environment, which really allows for a big drawdown, right? So I think that inherent volatility in Bitcoin is important to take into account if you think about risk as a potential investor. and how that stacks up against the capital structure.
Also, in the earnings call, it was pretty clear that Strategy is thinking about the potential products that could be built on top of Stretch or the other preferreds. In your mind, what are the opportunities here, and what do you think will be successfully built on top of Stretch or SATA? What opportunities are here?
Yeah, I have to kick it off. I think there's always the two ways. There's a TradFi way and there's a DeFi way. DeFi is always very quick to develop, which is great. So we've seen certainly two issuers on top of Stretch, and that gives an easy tokenized access to Stretch. Then obviously there's the levered version of that. So it's almost like called the CDO or CDO squared maybe even, where they strip the coupons in a senior and a sub piece. So I think, as with always these things, it's very important to structure in a way that can withstand different shocks. And we see some of them right now, so it's a good test. And certainly, I think that ecosystem will flourish because it's a very solid underlying asset base. If they're well structured, it could really grow. And again, continuous stripping, it's all about creating a curve, right? Creating stripping again, being able to allow different risk preferences for different investors.
I guess we'll judge the candidates. I'm not really sure what products will come next, but I mean, in terms of how we'll judge those, I'm going to be looking at, do they provide more transparency or liquidity versus just leverage? And I'm a little bit wary of just stacking leverage because I kind of feel like these digital credit instruments, I mean, they are like deleveraging instruments in themselves, like compared with pure Bitcoin or Treasury. I think most of all, I just want to see things that bring broader access, right? So getting inclusions in indices, ETF wrappers, those kinds of vehicles that will get broader access, basically.
I have nothing to add on this. I agree.
Well, we only have 2 minutes left, so maybe we could wrap up here. This conversation is about digital credit and the frontier. And let's say 5 years from now, we're at this conference and we're having the same conversation and we look back. What had happened in those 5 years in order for us to say, yeah, digital credit was the frontier, it was the future, it was the future.
I hope we'll be here, and there's a lot of width and depth, right? So lots more issuers, currencies, maturities, a whole, as you said, a whole curve you can trade, but also depth, so much deeper liquidity, much bigger size, potentially some different structured products on top of that. So really, like I think we're good at in general in the space, is taking the best of traditional finance and putting it on on digital assets, with hopefully again with the best practices and avoiding some of the pitfalls.
And I guess, I mean, all of that, and I guess if basically it stops being a crypto story and more like a fixed income story, right? Then that'll truly be success. When it basically becomes boring, essentially, you've got an institutional allocator sitting there at their terminal comparing digital credit instrument with a corporate bond on the same screen. Like, that's when we've really succeeded.
In my view, a success in 5 years would be where we are looking at capital markets with embedded credit assessments or credit intelligence. And crypto-backed institutional structures are not looked at historical milestones, but any ordinary issuance in the markets where anybody, retail or institutional investors, are already aware of the risks and are investing without having to think twice or thrice into that aspect. And I hope we reach that point in 5 years.
Awesome.
Welcome. This is BFC in NYC, the premier institutional Bitcoin adoption event. We are here with over 300 decision makers from across the industry. We're excited to welcome you, and let's get into it. So the people in the room are what makes today an incredible event. The top companies who are allocating Bitcoin to their balance sheet and leveraging Bitcoin to run their businesses are all in the room, having conversations and making deals happen. All the decision makers from across the Bitcoin ecosystem who have anything to do with corporate adoption, institutional adoption, are in the room here at BFC in NYC. Thanks for coming, and we hope you enjoyed the event. We'll see you in Hong Kong.
Also seen a lot of news stories coming out from my home country of France of just horrific, what we called wrench attacks, which is really nowadays almost a euphemism for the kind of the physical attacks that we see on people who are public about being Bitcoiners. How do you think about kind of that physical security layer?
Well, the layers that we have hopefully prevent that. So
Yeah.
those have mostly been kind of retail type individuals. And I think what happened there actually was there was some just information identity doxing type of leaks that happened where they didn't.
From the tax authorities
Yeah.
and from other sources as well, but
yeah,
so it's troublesome.
Here's your map of these people have lots of Bitcoin, and here's their name of an address. And gosh,
It's because they have a wealth tax, so they itemize kind of all the assets, and that that is a high.
I did not know.
Yeah.
All right.
Yeah.
Yeah. Look, governments do collect information. They ask companies, financial institutions to collect information. That then becomes, people in security are like, I don't want this information.
Right.
And sometimes we're regulatorily required to collect it.
Do you think there's a path? I've heard people kind of hypothesize about using zero knowledge proofs, for example, to try to minimize how much data gets stored in all these giant SQL databases while still maintaining kind of the regulatory posture.
Look, I think it's going to help. I think these solutions are coming to market now. I think it'll be good. Certainly can't be worse than where we've been.
Right.
But yeah, the wrench attacks are tough. So look, with the BitGo solution, there's typical things. There's duress capabilities that you can use. I'm not sure that those really work that well if you needed them, but we do have them. But mostly it's the policy. So by the way, something I'd like everybody to know, like you can come and you can get me. I've got access to nothing. All you will do is, cause me, I guess, a lot of pain. It's actually a very important point. Like we made a very, very careful attempt. There's no collection of executives at BitGo that you can come and collect and then somehow steal the money.
Right. Yeah, that's really important. Okay, so to kind of get on some lighter topics, let's talk about kind of the regulatory landscape that's really evolving a lot with regards to banks and financial institutions. So you mentioned market structure that is in the works with the Clarity Act, but the Genius Act was passed that was related to stablecoins. Really curious to hear from your perspective, kind of why should Bitcoiners care about stablecoins, and kind of simultaneously, we also hear people say stablecoins make Bitcoin obsolete. So why should stablecoin enthusiasts care about Bitcoin?
Okay. Well, look, I think they're very different things.
Yeah.
So payments today, if you're here in the U.S., mostly done in U.S. dollars. You probably get your paycheck. You may not, but most people get their paychecks in U.S. dollars. All right. And imagine you walk into McDonald's tomorrow, and you're here in Las Vegas, and they say that'll be 13 euros, and you're like, well, I don't have any euros, and they'd be like, tough luck, you can't buy your burger. It just turns out that like U.S. dollar in the U.S. is going to be a payment system for a long time. You're required to pay your taxes in it, at least for now. It is the payment system that's used. Bitcoin, of course, could become a payment system in the future. I think right now most people agree it's kind of so small and it's volatile.
Yeah.
People would rather save it than use it as a payment. This is not a ding on Bitcoin. I think it's the state of where it is kind of in its evolution. So, all right, we're going to have payments. We're going to have store value. Bitcoin can provide one, but not a lot of the other. Stablecoins are better for payments than banks ever were. By the way, we know that banks have let us down on payments because of the existence of all these payment apps, from PayPal to Venmo to, all
Cash App, and
Cash
all the
App,
rest. Yeah.
all of them. And what's happened is there's been a demand for better technology around how you do just basic payments, and the banking system just hasn't done it very well. Look, stable coins are way better. So in addition to being able to be digital and easily added to any of those apps that we just mentioned, they can be a one-to-one backed, so there's no fractional reserve. So most people don't think about how banks work. We know that banks are highly regulated. We've probably heard the term safety and soundness of a bank, which is very important. Basically what happens is you put your money at the bank, and of course we know the bank lends it out. And the safety and soundness is making sure that the bank is doing that in a responsible way with the appropriate backstops and reserve capital, so that if you come and ask for your money right now, you're going to get it. And for the most part, it works. But it is fractional reserve, and from time to time, it doesn't work. By the way, the reason there's so much regulation in the banking industry is because there's been a ton of failures over time. Now, some of those happened 100 years ago or 50 years ago. But all of these rules have been developed to try to make sure that we don't have repeats of it. So look, with stable coins, there's no chance of that. It's one-to-one backed. So it's super easy to put these into a T-bill money market type of thing. It's very easy to audit that. Very easy to see in real time. By the way, with our stablecoin, so we have a stablecoin as a service. We don't do our own stablecoin, but we're getting these things audited twice a month.
Yeah.
Show me a bank that gets audited twice a month.
Right.
So, and by the way, one of those at the end of the month. The other one is a random point in time during the month, and they come in at a random point to make sure you're not like moving the money intra-month, things like that. All right. So stablecoins are one-to-one backed. They should be able to give you better yield than you get at your bank. Interestingly, the risk-free rate today is a little under 4%, and yet banks are giving you like 0.2%.
Right.
Think about that.
Yeah.
They didn't have to take any risk. It's called the risk-free rate because it's considered that the T-bill is the lowest risk, right? All they had to do was give you that, and they could give you nearly 4%, and instead they're giving you 0.2% while taking risk. All right, so look, I'm assuming that the reason they don't put it into T-bills is because they're making more somewhere else, but they're sharing none of that back. The stable coins ought to be able to give this all back to you. It should be like an ETF. So like BlackRock offers a Bitcoin ETF. They charge 25 basis points to administer that. What's that administration? Well, it's some regulatory overhead and some operational capabilities and some audits. That's basically what we do with stablecoins. We have some regulatory overhead, we have some operational capabilities, and some audits.
Yeah.
So I think 25, 50 basis points seems like a reasonable kind of fee for running that type of service. And then the rest should go back to you. It's your money. You should get, what's it. And all right, so, and then lastly, it's 24/7. Like there's no banking fees, no wire fees. We can build apps on it. It's programmatic money. So this is just a better savings bank than we've ever had before. So I think that stablecoins and Bitcoin are just, today, two different use cases. And the reason stablecoins are actually great for Bitcoiners is because it brings it into the digital era. So when you look inside of BitGo's code base, you'll basically see a big if statement all over the place. It's like, if US dollar, go over to wire system, with these, Monday through Friday, 9 to 5, and all this crazy stuff. And then you got the digital world. And then that's all the same, whether it's, Bitcoin or stablecoins, et cetera, we have common code there. So we're going to just build much more efficient systems, much better systems. I think it's going to actually accelerate the adoption of Bitcoin that we now have stablecoins. So you take your dollars. It's very easy to get your mental model around it. Oh, okay. My dollars in the bank are one-to-one to the stablecoin. I now have the stablecoin, which is digital. I'm now learning about how do I self-custody that? How do I custody that? How do I think about that being a 24/7 thing and what goes with it? And then now I'm going to go into Bitcoin, and it's like just a super easy stepping stone.
Welcome. This is BFC in NYC, the premier institutional Bitcoin adoption event. We are here with over 300 decision makers from across the industry. We're excited to welcome you, and let's get into it. So the people in the room are what makes today an incredible event. The top companies who are allocating Bitcoin to their balance sheet and leveraging Bitcoin to run their businesses are all in the room, having conversations and making deals happen. All the decision makers from across the Bitcoin ecosystem who have anything to do with corporate adoption, institutional adoption, are in the room here at BFC in NYC. Thanks for coming, and we hope you enjoyed the event. We'll see you in Hong Kong.
Anytime that you launch a new product into the market is going to stress test you. They're going to see how you respond as a company, as a management team. How does the product respond? And we're in the middle of that right now.
Zach, I want to start with you because, Bitcoin is kind of like dog years, where it's like 10 years pass in like 1 year or whatever. But the ETF is kind of like the first OG wrapper launched in 2024. That was like 2.5 years ago, which is crazy. I think that's crazy. But that really kind of brought Bitcoin into Wall Street light, add a lot of validity to the asset class. Why don't you just kind of take us through where we're at now, how you see us moving forward, and just kind of like some of the history of the ETF wrapper?
Yeah, absolutely. So the first filings for Bitcoin ETFs were in 2013, and they didn't come to market until 2024. So 11 years later, a long battle with regulators. Grayscale took the step during that period to sue the SEC. We won that lawsuit. That's why these products came to market. So as the movie title goes, kind of crypto policy and crypto regulatory topics are one battle after another. So we've been through a lot of those battles, and there are more to come. But fortunately, over the hump on the ETFs. We thought that these products would be extremely popular with investors, and I think that has proven to be the case. And the reason is just they're the easy button for Bitcoin investing. There are lots of ways to buy and hold Bitcoin, and there's no wrong way to do that in my view. But if you buy Bitcoin somewhere else, you need to decide, where am I getting that liquidity and what kind of price am I getting the Bitcoin for? How am I holding that? Is that on an exchange? Is it in self-custody? How am I going to do my taxes? How am I going to do the rights of survival if something happens to me, to my family inherits the assets in an effective way? Can I borrow against those assets? In the context of proof of stake networks, how do I stake these assets? So there's lots of things that an investor in digital assets and Bitcoin needs to sort out for themselves. Essentially, the ETFs package all those solutions into a single instrument, and they just make it extremely convenient for investors. Institutional liquidity, custody, and all the normal uses of your brokerage accounts or your tax advantage accounts that you have with other securities, you have this with the ETF. So they're not doing anything complicated. Of course, there's lots of interesting things that Strive and others are doing that go well beyond this concept, but the ETFs are designed just to give you efficient, effective, safe, marginable, et cetera, all these things, Bitcoin exposure. They're a very simple instrument, and they've been very popular for that reason. Bringing us to the present, of course, the Bitcoin ETFs have come a long way. On the Bitcoin side, we've seen an expansion of other types of instruments, things like covered call strategies that build onto this concept. And then, of course, many other altcoins. The SEC now uses something called generic listing standards for crypto ETFs. We don't have to go through the lawsuit and the 11-year process to get other products to market. We have a set of generic standards. And so Grayscale and other issuers are broadening our platform beyond Bitcoin to Ethereum and Solana, et cetera, et cetera, et cetera, long list of other things. So that sort of brings us to the present. I think wildly successful products, a long time coming. I think an excellent way for any investor to build Bitcoin exposure into a portfolio.
Yeah, well, thank you for your service and fighting the good fight on behalf of the community there, suing the feds. Much respect. Yeah, so I mean, it's really interesting, right? So like you mentioned, the success of that launch, kind of what it did for Bitcoin as an asset class, getting more exposure. People can get more exposure to Bitcoin. Kristen, you guys have a very interesting perspective, and we talked about how some emerging markets are for the first time launching their domestic ETF products. Walk us through kind of what you guys are seeing kind of outside the US, if that's going to maybe kickstart a little price action here, more demand for these kind of products worldwide.
Yeah, I'm really happy to share with you guys that as an index provider, we're working with everyone globally, and we're seeing more demand from emerging markets than we ever have before for simple Bitcoin ETFs. And this is just regulatory, right? They've been all wanting to do what the US has been doing, but now their regulatory regimes are opening up. But one of the things that I think is interesting that we were chatting about when you think about Bitcoin, there's no like, what is the price of Bitcoin? It's more like, what did you exchange Bitcoin for, or what rate did you get? And as an index provider, I have hundreds of Bitcoin indices already up and running. And you're like, why so many? Isn't there just one? But they, of course, have different closing hours, the model that you use to fix it, the data inputs. So I'm hearing from a lot of these emerging market asset managers that they want a domestic Bitcoin index. And what that means is they only want us to use data inputs from their region. And they only want data pairs that might be like, if it's Japan, it would be Bitcoin yen, Bitcoin USDC, and Bitcoin USDT, and that's it. They don't want any other currency pairs to go into that aggregated price. So we're very busy doing these indices right now, but I think that's a strong signal that the rest of the market is coming, and we'll see more pressure or demand on Bitcoin in general.
Yeah, and it's super interesting. I think that's very, encouraging. So, we kind of have like the basic ETF wrappers. I'm a big believer, keep it simple, stupid. Like I'm a big, cold storage guy myself, but arguably the most exciting developments in Bitcoin and finance have been, the preferreds, and obviously a hot topic of conversation now. And Ben, you guys at Strive are clearly on the forefront of this. And I kind of want you to help us peer into your guys' thought process of the financial engineering that goes on at Strive. And I don't use that in like a negative context, but I think you guys have really elevated the wrapper game. And maybe you can kind of just touch on how Bitcoin supercharges your balance sheet, the capital structure, the flexibility you guys have over traditional balance sheet or capital structures.
Yeah, and what an interesting week to be having this conversation, huh? Anytime that you launch a new product into the market, you know that there's going to be a point in time where the market is going to stress test you, right? They're going to test the limits of the product. They're going to test the faith of investors. They're going to see how you respond as a company, as a management team. How does the product respond? And we're in the middle of that right now. So this is a part of this growth process. It's a little interesting because I've never truly considered either of our products through the common equity or through the preferred to be an actual wrapper of Bitcoin. To me, it's a way that we can bring different types of exposures and different type of investment characteristics to investors. So for instance, if you think about the fact that we've got a Bitcoin balance sheet that's got nearly 20,000 Bitcoin on it today, and we've got the amplified exposure, that means that our common equity is going to be highly sensitive to the moves in Bitcoin. So I view it mostly as an enhanced volatility product. That's really attractive to a lot of people that want to take directional bets one way or the other. And what we want is to create the best vehicles for people to express those trades in. So that's what we've done with our common equity. On the other side, there's an acknowledgement that, one, not everybody's found Bitcoin yet. You walk around the streets of New York, you can have the conversation. Most people won't even be able to tell you the issue with the money in their pocket. They've never had the time to stop and think about it. But what we know is that there's always a consistent demand for cash flow. It's a central part of individuals' lives. It's a central part of running a corporation. And so for us to be able to carve off part of the volatility profile of Bitcoin and part of the excess return of Bitcoin and be able to deliver that back to investors in an attractive yield product, I view that as us taking Bitcoin and moving it one step closer to investors where they are today, right? Instead of waiting for them to come to Bitcoin to find out all of the benefits of an asset that you can self-custody, that you can hold, that you can transact with no intermediary in the process, we all know how powerful that is. Most people haven't started the journey. So if we can bring an attractive product out to the masses that provides them day-to-day utility in their life that's made possible by Bitcoin, to me, that is going to help us bring Bitcoin one step closer to them and help them on that journey, to accelerate that journey. Because if the product's good enough for us to issue a product like this into the market, it's probably something that they themselves should want to hold. So that's how we actually see this playing out there in the market, is we have a realization of you have to find the investors where they're at, and that means paying very close attention to what they want. And kind of the trio, if you could really hit the home run in any one of these products, is price stability, right, which is what's being tested right now in the market, high yielding, low volatility, right? Like that's what you're trying to accomplish, and deep liquidity. And when you're trying to do all three, right, that's where the market's got to stress test each one of those. And liquidity right now is the one you're seeing. There's deep liquidity in these products. There has been for a long time. And we think they're just a really unique value proposition that we can make available because we decided to take the step to capitalize our company on Bitcoin, because we can manage the risk as a corporation, right? We can now offer attractive characteristics into the market that it really hasn't seen before.
Well, that's beautifully put. And it's my understanding that, SATA is a daily dividend, first ever daily dividend in U.S. security history. Yeah, well, that's pretty cool. How does that play into like these three legs of the bar stool?
So that was a really big unlock. That's one that we're very proud of. And the reason being, if you think about dividend paying corporations that are out there, only 2% today even pay monthly dividends. You would think in 2026, people would be moving up the frequencies on these because the quarterly dividend really came into play back in 1885. So we still are following a standard practice that was established in the 1800s, which seems crazy. And so being able to unlock daily has a real material impact on how you would expect the security to trade. So if you've got a security that pays one monthly dividend, that means that during that month, there's one date where it's truly economically required to hold the security to get the benefit of the dividend. When we changed over to daily, it means that literally every day that market is open, you've got that day as a record date, that day is a next dividend date, and that date is a payment date. So now it becomes economically beneficial to hold that security every single day and not use it to trade in and out of, right? It could become a landing place for capital. Some people may just find the yields attractive enough that they just want to park, moderate duration capital in there and collect those daily dividends. But you're seeing those dividends hit your account every day, and there's something with investors where that's very comforting, and it's something they've also never seen before. Money markets started getting into that. They had the daily accrual, right? And these are not money market products, but the concept of daily really came out. There was a daily accrual, but it was still paid monthly. And so this is really the first time where you're seeing that benefit in your account every single day. And we think that's a really big unlock. And it's one in capital markets history that was made possible by a Bitcoin company. And I think that's a really cool thing that we can put that feather in our cap, that this is just one more way Bitcoin has changed the financial services industry.
Yeah, no, a huge tip of the cap to you and the Strive team. I did tell you guys pioneers here. So that's amazing. And, Kristen, one of the things I want to really get your perspective on is just, working the indices business. How are you guys thinking about Bitcoin exposure, and what do your clients actually want when push comes to shove?
In terms of how we calculate it, or the wrappers?
Both. So I know we talked about, being wrapper agnostic. So it's like, okay, what do they want to see, and how are you guys helping them see that?
Yeah. Well, I actually just want to say, I think it's funny that someone thought this was a controversial panel, because I think having multiple wrappers for access is so healthy for any ecosystem. I work at FTSE Russell. Today is Russell Recon Day. It's the day we reconstitute the whole Russell series. And why that series is so well adopted is because we've got futures, options, a lot of ETFs, mutual funds, like all kinds of wrappers working together. So you have different instruments to hedge with. So I think it's great that we're seeing DATCO companies and ETF companies, perpetuals, futures, all of that on Bitcoin. And then from the indexer's perspective, like I said, it's really interesting that something as simple as Bitcoin, you could be calculating different rates for Bitcoin depending on the wrapper. I'm going to get really technical and boring for 1 second, but for our derivatives clients, they want us to do a time-weighted model. So as you get closer to 4 o'clock or whenever they're rolling, you want the pricing information to mean more. So we do a 15-minute time-weighted look back. For the ETFs, we use a 1-hour simple average look back. So the market makers can make the market between 3 o'clock and 4 o'clock and have a little bit of room to make some money on their own as well. So I just think it's interesting that this one instrument can demand so many different indices or calculations for all the different wrappers, but they work really well in concert together.
Yeah, and it's just a great logical point and explanation, because we're definitely going to get slandered on Twitter because of this title, but it just goes to show, like in real life, people need different sorts of exposure, and that's not a bad thing. And Zach, you kind of alluded this to the beginning, but derivative products, very important, crucial underlying plumbing to financial markets, and we're really kind of seeing a big developments of derivatives within Bitcoin. So you spent the better part of 2 decades in macroeconomics. How are you seeing the derivatives market in Bitcoin developing, and what does that mean in terms of deepening Bitcoin capital markets and maybe some opportunities that's going to unlock in the future?
Yeah, I'll offer a couple things. Maybe I'll just address the thing about the panel or the wrappers being controversial in some ways. I'd just like to remind people that central banks hold physical gold as a kind of national store of value asset for worst case scenarios. And most of those central banks keep it in the basement of the New York Fed in downtown Manhattan. So, the wrapper...
Theoretically.
In theory. I've been down there and looked at it myself. So we know that it is there. The institutions like a Grayscale or anybody else is just there to, help people meet their needs. And the wrapper helps people meet their needs, just like the gold in the basement of the New York Fed. And if you want to take your Bitcoin out of the ETF, or take your gold out of the basement of the New York Fed, you're okay to do that, as if the service is not something that you need. The derivatives markets are increasingly very rich. There's been a lot of things going on this front. Of course, I would say the things that are front of mind for me are perpetual futures and the rise of platforms like Hyperliquid, Bitcoin trading on those types of venues, both in perps and spots. All the things that are happening in options market. You have a very kind of strange shape in options market because so many companies are selling calls, covered calls, and a lot of investors are buying puts for protection. So you have a very skewed options market, but just shows the use of these derivatives for all types of different users. And then maybe I'd add prediction markets, or what Hyperliquid would call outcome markets. I think that these will be very popular for retail speculators, in particular on Bitcoin and other things. So very rich, to Christian's point, very rich ecosystem of derivatives. It just speaks to how far Bitcoin has come. And going back to the macroeconomics briefly, I mean, this is why I remain so confident about Bitcoin, even in down markets, even here at 58,000, 59,000. The thing that still goes up and to the right all the time is government debt and deficits, and these are the things that drive demand for these assets in the first place. So I just sort of, whenever we're at a down market, I just remind myself the core reason that we're all here, which is that we're taking huge risks with our fiat currency systems, and we need these other assets like Bitcoin to provide a ballast to portfolios, and whether they're buying in an ETF or through a variable rate preferred or through a derivative product, they're all good ways to get access to Bitcoin.
No, certainly here. And guys, in our last minute here, I just kind of want to do a rapid fire down the line, starting with you, Ben. Share with the audience one future, maybe hole in the market that you've seen, financial product or opportunity you're excited about in Bitcoin land.
What I've actually had a lot of discussion around is real estate developers or real estate investors that are finding a lot of value in Bitcoin. And, it fits a lot of the principles that they have in their portfolios today. And as they're watching the real estate market inflate, they're looking for a new home for that capital if they have to rotate it into something else, right? When you see the price of real estate rising and you see the affordability of it going down, right, there's a fundamental disconnect out there. And so I've had a significant amount of conversations with fairly large real estate investors that are looking for a place to park that capital if they sell out of a real estate investment. And a lot of them are finding Bitcoin is the place that they want to put it. So I find that very encouraging.
That is neat. I've actually had a couple of conversations like that too. That was a good call out. Kristen, how about yourself?
We're also building a lot of indices that are Bitcoin, precious metals, also any of the rare earth commodities all pulled together. So I think that's great because it's saying everyone feels like Bitcoin's a core part of some sort of portfolio. It might be an investment as a store of value, or it might be people are starting to think about it like these other precious metals and rare commodities, and they want it all together. So I think that's also a very positive sign.
Zach?
Maybe I'll close by saying I think truly the institutional adoption of Bitcoin ETFs is only right now getting started. When you think of classic institutional investors, pensions, endowments, insurance, sovereign wealth, there's been a couple that have dipped their toe in, but actually it's a still very narrow list. And we interface with all these types of investors, and those discussions, those allocations are all kind of going through that process now, and they see market prices today as a huge opportunity. These types of allocators, the last thing that they want to do is make a foray into crypto and then 50% bottom falls out. They see the drawdown, they see the structural adoption trends and the need for these types of assets and portfolios, and so now you're going to see those allocations, I think, over the course of the next 6 to 9 months or so.
Well, thank you guys for sharing your expertise. Let's give them a big round of applause.
Zero is the wrong number in terms of how much Bitcoin you should own.
Now, zooming out on Bitcoin as a whole, were you surprised by the success of the Bitcoin ETFs and Larry Fink going on TV promoting Bitcoin?
I think Bitcoin is becoming more popular. People are becoming more aware of it. I mean, the ETFs are a marketing game. I'm in favor of it because it helps people get exposure and interest in Bitcoin to sort of understand it as an asset class, start to think about it how they include it in their own capital allocation. We have sort of team members that have come up with a phrase, which I enjoy, is sort of zero is the wrong number in terms of how much Bitcoin you should own. And I think that having more products out there that encourage that adoption and the adding of Bitcoin as an asset class in terms of some shape, form of exposure into your portfolio is great. So you've got ETFs. I think, again, what Strive and Strategy are doing, are allowing other ways to get sort of the income, the fixed income side. Exposure to that is great, and then for others, they're going to want to own spot and think about how do they leverage it in, based on that type of ownership.
And then competitively, how do you think about kind of the margin lending against iBit versus against physical Bitcoin with Bitcoin-backed lending?
So right now, the space is very much, we lend against essentially spot, right? In terms of the actual asset. I think it will be interesting to see how it evolves. For the most part, our decision in terms of what we lend against is against the liquidity of the asset in the market. How easily can it be traded? How fast can we sell it? What is the access to sort of liquidating it, selling it when we need to? And so I think what Michael Saylor shared yesterday in terms of how much Strategy and Strike, MSTR and Strike are being sold in the market from sort of a volume perspective is encouraging. I think you will see people start to think about how they incorporate those type of assets into portfolios, because that's been, like, the ultra wealthy have been playing this game for centuries, right? They've accumulated business portfolios, real estate portfolios, and stock portfolios that they've been able to leverage to make additional investments, to live their life in sort of a tax-free way. And I think sort of Bitcoin and these new sort of equity options as well as sort of digital assets are going to provide that opportunity going forward, with really Bitcoin being the predominant one that's leading the way.
And with large borrowers, have you seen them kind of add derivative overlays to manage their risk, or is that kind of more uncommon?
We do know of sort of high net worth and family offices and more sophisticated borrowers. They ask questions. They do have different sort of derivative strategies that they wrap around their borrowing. I do think, again, once the capital has come on board, you will see some more of those structures come into play as sort of the market matures and it grows, right? You have more people into it, you have more money that people are looking to take advantage of, and then they can also diversify how they think about their value building strategies or their capital sort of treasury managed strategies if you're business, or your wealth building strategies if you're an individual.
Welcome. This is BFC in NYC, the premier institutional Bitcoin adoption event. We are here with over 300 decision makers from across the industry. We're excited to welcome you, and let's get into it. So the people in the room are what makes today an incredible event. The top companies who are allocating Bitcoin to their balance sheet and leveraging Bitcoin to run their businesses are all in the room, having conversations and making deals happen. All the decision makers from across the Bitcoin ecosystem who have anything to do with corporate adoption, institutional adoption, are in the room here at BFC in NYC. Thanks for coming, and we hope you enjoyed the event. We'll see you in Hong Kong.
Quantum computing a threat or is it overblown?
It's both.
I am fascinated by quantum computing.
I think there's definitely a lot of unknowns with quantum computing.
It is a theoretical risk on the Bitcoin network.
The big threat, in my opinion, is the discovery and unlocking of wallets that have been lost forever. Bitcoin is a scarce asset that you can make more of, but you can find more of it by unlocking these old wallets that could pose a threat to Bitcoin.
The quantum concept is, what do you do with the Satoshi coins if they are not quantum resistant and they don't move? It's a really interesting philosophical debate because you could argue that if quantum computing is a real threat and it can come and crack the Satoshi coins, I mean, obviously there's a probability of having a bad actor that wants to tear down the entire ecosystem, but the game theory would suggest that there's more incentive to break the Satoshi wallet, keep the coins, and build on that into the future.
I don't know what the answer is, but I do know that there are a lot of teams working on protecting Bitcoin against it. Teams like Blockstream have a lot of PhD engineers currently working on upgrading Bitcoin to stave off those threats.
I do believe that the technology, as all technology does, will progress and get better. The Bitcoin network has the ability to upgrade and change and morph, and I think that's really the beauty of Bitcoin, is that it's distributed network of nodes. Frankly, I'm currently unconcerned by quantum.
The question is still if and not when. Still, it is important to take that question into consideration and most importantly, not add changes to the protocol with rushing into a solution in search for a problem.
There are people in the Bitcoin community that don't want to see a change to Bitcoin. They believe Bitcoin will be fine as is, and it's designed the way that Satoshi envisioned, and it would be a bastardization of what Satoshi viewed if we make a change to the Bitcoin protocol.
And my view is that Bitcoin will win. Bitcoin will actually be the best prepared for the future of what could be quantum. And you have already solutions that are being proposed by the market, and the best will win. And my view is that the best will be an optional one where people can opt in over time as they perceive a potential risk.
I do understand why people have the fear. I think it's an incredibly complex topic. We're literally talking about quantum physics, and I'm no expert, But from the people that I've listened to and the people that I trust and the research that I've done, I do not think it's an immediate threat. And if it were to become a threat, there are things that the Bitcoin network can do to protect itself.
I would say the threat is less imminent than the headlines suggest, and work being done already to address any potential threat in the future is more robust and diversified than people think. And what I mean by that is there's lots of different work already underway that they range from changing the protocol itself or updating the signature scheme to post-quantum proof signature schemes versus, say, having contingencies and plans that would allow somebody, in case in the future they need to move or migrate to that signature scheme, they can. And so there's a lot of work being done, and the community is already discussing and debating ways that this could potentially happen, but it seems like the threat is more theoretical in nature right now. And I think people underestimate Bitcoin's resilience. Bitcoin is the most secure computer network in the world. It's decentralized. And so what that means is there's a ton of eyeballs looking at this open source code. They're maintaining it, looking for vulnerabilities, making proposals. There's a ton of discussion, and that hive mind is one of Bitcoin's biggest strengths. And that's why its uptime is 99.9%. Despite it probably being the biggest honeypot for any potential attacker to go after. So I think Bitcoin is extremely resilient, and people shouldn't underestimate it.
I think it makes for a great story. It is incredibly interesting tech. It'll continue to move forward. We saw this back there with the Y2K bug back in 1999 where the world was going to implode. Technology marches forward and Bitcoin continues to adapt for it. And if anybody's worried about quantum breaking Bitcoin, they should be more worried. Quantum will break everything way, way before Bitcoin. And Bitcoin's already adapting to it because that's the nature of open source software and something at this kind of network scale. So it's actually going to unlock incredible possibilities. So I'm not one of these people that sees the progression of tech as dangerous. I see as we adapt to it, Bitcoin it will adapt to it, already is. The discussions are great around it. And we're going to see many, many great things unfold from quantum computing.
There's multiple attack vectors for quantum on Bitcoin, but there was even just a paper that was released a couple of weeks ago where without even having to go through a protocol upgrade, we know how Bitcoin and Bitcoin wallets and the consensus mechanism can be completely quantum proofed. So is it a threat? Yes. Are there ways to alleviate that threat such that it will not destroy the Bitcoin network? Absolutely. Do we have to come to a consensus in the Bitcoin community as to what we need to do to protect Bitcoin? Absolutely. Do I think that's going to happen tomorrow? No, but I think we have some very smart people in the community that have figured out ways to make this work, and we have a couple of years before quantum really becomes the true threat that it may be. And at the end of the day, I'm more worried about what quantum and its threat will be on the global financial system as a whole, more so than just native Bitcoin.
Welcome. This is BFC in NYC, the premier institutional Bitcoin adoption event. We are here with over 300 decision makers from across the industry. We're excited to welcome you, and let's get into it. So the people in the room are what makes today an incredible event. The top companies who are allocating Bitcoin to their balance sheet and leveraging Bitcoin to run their businesses are all in the room, having conversations and making deals happen. All the decision makers from across the Bitcoin ecosystem who have anything to do with corporate adoption, institutional adoption, are in the room here at BFC in NYC. Thanks for coming, and we hope you enjoyed the event. We'll see you in Hong Kong.
Good day, everyone. My name is Adam Livingston, and I am the Bitcoin Wizard. Today, we are going to talk about the real way that Bitcoin is going to win. It is inevitable because it is the apex asset. If you are walking through this world today and you still do not see how Bitcoin is warping the incentive structure of humanity, you are asleep at the wheel. This thing is going to $1 million and beyond. It is inevitable in my eyes. Obviously, we are on the heels of the BIP 110 soft fork yesterday. Now, I will just say one thing. No matter what side of the issue that you are on, I hope that you are happy with the outcome. Peace and love to all Bitcoiners of all ideologies. But today is going to be talking about pragmatism, because really, in that debate, what did we see? We saw differing opinions about how Bitcoin is going to win, how Bitcoin is viewed as an asset, what should be the particular approved use cases of Bitcoin, what is money, is it capital, is it not, etc. All of these questions, these were the things that were being debated. And it was a fascinating question because Bitcoin entered the world in 2009. The Genesis block was mined, so there was a technical ambition with Bitcoin. The Bitcoin white paper is a technological document. It's not a political manifesto. Even though people think that it is, and they like to take their subjective political preferences and attach the ideal end state win condition for Bitcoin, no. At its core, Bitcoin is a neutral monetary network. It's a scarce digital asset with a public issuance schedule. You guys know the monetary properties of Bitcoin. I'm not going to repeat them today. It does offer a monetary exit from the traditional system, but we really need to take a pragmatic view of how Bitcoin is actually going to win. And it's not going to win by rewriting human nature. There's a certain core of Bitcoiners who come to Bitcoin with their subjective political preference attached to it because they believe that Bitcoin is compatible with their political views. They have this large dream of separation of money and state. Now, obviously, that dream has appeal to a lot of people. This orange coin comes into history, and then the central banks, they explode in the background, and every single finance ministry out there, they update their LinkedIn status to open to work. But reality has a thicker plot. Unfortunately, there has never been an anarcho-capitalist libertarian society ever. There has never been a durable civilization that has been absent of state. States exist and they persist because political coordination is fundamental to human nature. People will always demand courts to solve conflicts, to mediate on conflicts. People will always want to band together for defense. They want to set the rules of their particular societies. They want to build infrastructure. They want to tax the populace, etc. So basically, Bitcoiners are correct in the sense that the state is this abstraction of people who own the weapons and set the rules. 100%. That is exactly what government is. But there's this naive view that Bitcoin was going to come and shatter that from human nature. It was going to shatter that political coordination. But in reality, what's going to happen is that Bitcoin is going to alter the monetary terrain beneath the institutions. The practical victory of Bitcoin is going to come through discipline. Because if you think about the game theory of things, the governments that are facing this scarce, portable, globally traded alternative to their fiat currencies that are going to zero, Bitcoin is competing with fiat for monetary trust. So debasement over time is going to become a lot easier to compare versus fiat versus Bitcoin. The capital controls of governments become more visible because Bitcoin, being the network, is going to be able to discipline fiat. And a lot of Bitcoiners I continue to see to this day, and it makes me almost want to pull the hair out of my head. I'm going to try to speak politely, but so many people do not understand the difference between fiat currency and government currency. They literally cannot square those things in their head. It's almost like they forgot that there was a sound money standard before fiat. Governments have actually had a neutral reserve asset backing their currency before. Now, obviously, when it comes to gold, the governments can ban it, like what happened with Executive Order 6102, 100%. Tyranny is still possible, absolutely. But remember, you are coming into the conversation saying that governments are just an abstraction of a group of people that have the guns and they set the rules. The reality is those people, that group of people, this government idea, it is just an abstraction for people. That group of people, they will be incentivized to get as much Bitcoin as they can. Markets are literally a player versus player game, okay? And governments are playing that exact same game. You're never going to get rid of coercion and violence, so a lot of Bitcoiners, they bring their political presuppositions to Bitcoin. Presuppositions, in fact, that they can't even philosophically justify, and then they push you out of the camp of what a real Bitcoiner is when you don't meet their preferred definition. It's a ridiculous game. The arguments for this video is going to be Bitcoin is going to win by making the monetary power that is out there actually answer to competition, adoption, and the possibility of sovereign reserve demand. We're already seeing this. The genie is out of the bottle. We're not going back. Anyway, if you guys could do me a huge favor, like the video, subscribe to the channel. That way you can support me spread the orange gospel of Bitcoin to the masses. And guess what? If you are interested in buying Bitcoin at this level of oversold with full principal protection, my friends at Solvana are standing by to help you. Yes, what if you could lock in a 5-year position to invest in Bitcoin when it's this cheap right now with full principal protection while sharing over half of the upside? And not only that, but if you're more of a degenerate like me, you can actually buy MSTR if you want to. My friends at Solvana.io are standing by right now to help you get Bitcoin or MSTR with full principal protection. Go to Solvana.io/capital right now. Scan the QR code to get in line today. Do not delay. This is a great opportunity. But if that's not your jive, the Bitcoin Way has you covered, because the Bitcoin Way can teach you to have your Bitcoin in 100% self-custody the safe way. Guess what, fellas? How much customer funds do you think the Bitcoin Way lost their clients during the cold card fiasco? It was precisely $0.00. My friends at the Bitcoin Way will teach you to be a sovereign Bitcoiner. The reality is you guys are competing with governments for control of Bitcoin. That's correct. The race is on. We are in a digital gold rush, and you can be your own bank today using only the best open source tools. I am a huge believer in Bitcoin in self-custody, and I really believe it is tremendously important. You can go to thebitcoinway.com/Adam, scan this QR code, run a node, become sovereign today. Scan the QR code right now. I'm not asking you, I'm telling you, kids. So what people need to understand is that they're constantly committing this category error of comparing political decentralization to protocol decentralization, okay? These two concepts, they are describing totally different things. Bitcoin itself, it distributes verification across a network, and then of course it fixes issuance through consensus rules. Now, politics, it organizes authority through people who disagree about the goals of civilization, people's rights, risks, and resources that are available to humanity. So we have this blockchain that can settle a transaction with very impressive precision for, 16 plus years. The same blockchain, though, it does remain silent when a city argues about zoning or taxes, or a country mobilizing after a hurricane, or a court deciding which contract carries legal force. Now, this distinction matters because you constantly see people smuggling a political conclusion into a technical property. Bitcoin just is. You see this idea that this distributed verification of the Bitcoin network, it can somehow become a distributed society. They think a scarce money can become scarce government. But every single one of these jumps, it's a philosophical jump, okay? And this happens because they are adding these assumptions that the protocol itself is leaving totally unspecified. It's very clear that Bitcoin gives individuals and institutions a stronger monetary option, but political coordination will continue to move around the option. The rational people, in my opinion, they will continue to adapt to it. And obviously, you guys know that a lot of the times they resist Bitcoin. And sometimes, of course, there are entities that try to own a large strategic pile of it. That is why I think the people that are doing that are the winners. So the practical question, therefore, concerns incentives of individuals and then abstractions of groups of individuals. How does a credible monetary exit change government behavior over time? This question leads toward very observable effects, which are competition between the currencies, pressure on weak monetary regimes, and greater demand for policy credibility from governments. This is discipline, and we have a new reserve asset that sits beyond any single issue. issuer of fiat currency, and that is the beautiful gift of Bitcoin. And I really love the white paper because it delivers a very clean reading. It keeps the invention of Bitcoin very, very focused. Satoshi Nakamoto describes a peer-to-peer electronic cash, a chain of proof, and a mechanism that lets participants agree on transaction history. Now, obviously, this system, it replaces institutional trust at one particular point with verifications, incentives, as well as computational cost. Now, the properties, they obviously carry political heft to them, this political weight, because money sits inside of every single political relationship. But the Bitcoin white paper leaves constitutional design, taxation, welfare, defense, and foreign policy totally in human hands. I'm sorry, this is just true, and I think that that boundary really strengthens the case for Bitcoin. The protocol is supplying its own constraint, and society will continue to decide how that constraint enters things like law and markets and public balance sheets. Now, of course, I want to give a fair shake to the other side because I was a hardcore libertarian anarcho-capitalist in my youth. This was actually how I even got into Bitcoin in the first place. I first bought Bitcoin in 2012 because I was pre-orange pilled by Ron Paul, understanding gold, sound money, the Federal Reserve, central banking, all of this. When I was 17 years old, I was totally sound money pilled. And then I read about Bitcoin on an anarcho-capitalist subreddit, and then I bought Bitcoin in 2012. That is my story, but my thinking has evolved from then. But regardless, I do want to give a fair shake to the other side and try to steelman their opposition to me. My political views have evolved, obviously, over time, so I really want to give the other side a fair shake. Now, I think the strongest anarcho-capitalist case begins with a very serious diagnosis, which is that monetary discretion can transfer wealth very quietly. We know that new money reaches different groups at different times, just like how the money printer enables this with the Cantillon effect. It's very obvious that the asset owners and the politically connected individuals in society, they get to benefit before prices fully adjust. I think that this is very demonstrable over time. I think that if you argue against that reality, you are insane. So we have savers and wage earners absorbing the later effects, okay? Obviously, the government's printing money that is not backed by a scarce neutral reserve asset, I have a massive problem with. We've seen in communist countries that capital controls, they trap wealth inside of a failing regime, and then they kill anybody who tries to take it away from them. This is wealth distribution. It has led to lots of violence over time. I don't got to give you a history lesson, but it happened in Venezuela, it happened in Russia, it happened in Cuba. I could go on and on. So a lot of these anarcho-capitalist libertarian Bitcoiners, they are very much against governments hoarding Bitcoin because they have seen governments go tyrannical. Now, this is just reality. Humans are fallible creatures. We are flawed. We are sinners. We miss the mark time and time again. Expecting Bitcoin to fix human nature and usher in a political utopia is a flawed idea that will never, ever happen. If that is your win condition for Bitcoin, I am very sorry, but you are sorely mistaken. Now, Bitcoin obviously, thankfully, answers part of the problem with the credible scarcity of the asset itself and the ability to take personal custody. It is fantastic that the monetary authorities throughout all of history, they once enjoyed a very captive audience, didn't they? But then Bitcoin installed a side door and put the floor plan online. So I think the philosophical case for the libertarian, the ANCAP people, it really reaches its strongest form because they see this concentrated monetary power. It deserves competition, but Bitcoin is bringing that competition. We should want competition in a free and open marketplace, and governments being an abstraction of groups of people, they should earn monetary trust through performance. Bitcoin gets to advance all of these goals as courts, taxes, and public institutions continue to exist around Bitcoin because those things aren't going anywhere. So when we look at what a state is, what is a state? It's a coordination machine because it's literally just taking taxation, the concepts of law, law enforcement, spending money, borrowing money, and legitimacy. It's wrapping up all of those concepts in a nice little bow. And central banking, it forms kind of one organ inside of the larger body of the state, but hard money can constrain part of the body while keeping the rest operational. It is demonstrably true right now with a strategic Bitcoin reserve. The United States government custodies Bitcoin. China has Bitcoin as well. So we have states that exist today that are custodying Bitcoin. They can spend dollars and issue bonds and regulate the market. They can regulate exchanges. They can enforce contracts. So we see political power moving through separate channels, but the monetary issuance represents only one channel within that regulated government system. So the useful goal, the practical goal that we should be striving for as pragmatic adoption of Bitcoin, we need to think it is simply this: better constraints across the entire power structure. It can give better constraints and provide discipline. If governments aren't going anywhere because there's never been a flourishing society where governments don't exist, can the existence of Bitcoin limit the convenience of inflationary finance? 100% it can. Think of Bitcoin as this formidable new member of the checks and balances ensemble that you were taught in government class. That is what this is. It brings proof of work to a room that's been previously dominated by proof of committee. The room stays open, and then the committee simply faces a much tougher audience. The global liquidity of Bitcoin makes Bitcoin useful across a single government jurisdiction. Self-custody gives users a committed route outside conventional account structures. And then the visible market pricing of Bitcoin, that obviously turns confidence into a continuous public signal that is accessible by anybody. Now, all of these features together, when you bundle them up, they increase the cost of weak monetary governance. Governments will embrace Bitcoin because they will have to, because fiat money is going to zero. If governments want to improve fiscal credibility, they have to adopt Bitcoin. Every single response from governments and corporations, they will be reflecting Bitcoin, the free market, reflecting competition over time when you see that you cannot compete with the apex monetary properties of Bitcoin. You have to understand that durable adoption of Bitcoin, it grows through repeated usefulness of the asset to all entities. The practical win condition of Bitcoin, therefore, it kind of resembles like a pressure building across a system. We know that households will continue to diversify their wealth into Bitcoin as it's proven over time. Network effects, those only increase through increased capitalization of the network. This is just true. I don't think anybody rational could disagree with this. Think about Bitcoin being $1 million and the signal that that sends to people who still don't get it. That gains legitimacy. Narrative matters with increased capitalization of the network. People find out about it. People ask questions. They YouTube, what is Bitcoin? Then they get orange pilled. A lot of people, they don't like to think of increased capitalization as some necessary stepping stone. If governments are never going anywhere in the world ever, we should want them to buy Bitcoin. And in particular, I think you should want your government to buy a lot of Bitcoin. And you should probably want your government money being backed by as much Bitcoin as possible. It's inevitable that the governments of the world are going to recognize an asset with the rules that are written outside of their own authority. We're going to see this thing where you as an individual can take monetary sovereignty, but at the same time, it's going to share the stage with monetary competition of governments of the world with their fiat currencies competing with Bitcoin. And rational actors, they will continue to borrow fiat to buy Bitcoin to increase the capitalization of the network. And that is how Bitcoin imposes itself over the political world. And what's funny is that 5 years ago, El Salvador did something and made Bitcoin legal tender, and Bitcoiners celebrated. So for some reason, it's great when some governments adopt Bitcoin, but now it's somehow a bad thing and people think it's corrupted. And we've seen El Salvador be nothing but successful in gaining government legitimacy ever since they adopted Bitcoin. Isn't that interesting? So it's very true objectively that Bitcoin can discipline a state, partly because the state may choose to hold it. The asset itself, it competes with sovereign money while becoming part of a sovereign strategy. This is pragmatism. This is Bitcoin winning. Has El Salvador become a better place to live ever since they adopted Bitcoin? The realistic outcome of Bitcoin winning, you can look to El Salvador. It's less like permanent separation and more like a new balance of monetary power. Bitcoin is not some libertarian prophecy. It is a competitive force that is altering human incentives, because hard money clearly raises the cost of monetary abuse. Global liquidity gives savers a choice beyond their sovereign currency. So being practical, we can give the debate some useful milestones. What would it mean for Bitcoin to continue to win? First, I think people gaining access to long-term savings outside a single political monetary system, that's fantastic because fiat money absolutely sucks, especially when it comes to saving. Checkbox number 1 already done. Second, maybe that businesses that continue to adopt Bitcoin, they can gain settlement options that cross borders and operate beyond conventional banking hours. Checkbox number 2, that one's done and that continues to be accessible to people. A third might be financial institutions compete on custody and transparency and fees and service quality. Check that box as well. And then fourth, maybe governments, they face clearer market feedback. And then fifth are going to be sovereigns treating Bitcoin as a strategic asset under formal governance because it's rational for them to do so. Check that box number 5, you are seeing sovereigns adopt Bitcoin today. Under this framework, Bitcoin is winning across every single objective look at things. The intellectual upgrade that we need to adopt as the Bitcoin community is increased capitalization of the network, because that is where the network effects will be derived from when we are speaking pragmatically. Replace the messianic finish line with observable pressure that Bitcoin is exerting upon the traditional system. Bitcoin will continue to see when we see the monetary institutions have to earn loyalty from people who possess a credible alternative. This standard offers fewer fireworks than governments and states being absolved in a big bang flash. We have something far more durable, which is a technology that is built around a claim that we continue to verify. It will discipline power structures. It will not eliminate them. The win condition is very practical. The governments will compete for monetary credibility. The citizens have that stronger exit whenever they want to, and sovereigns will continue to encounter an objectively better asset that they will eventually choose to hold, or they will be rendered irrelevant. Power is always going to stay political. You can never get away from that, but the beautiful thing is that money becomes harder to take for granted. My name is Adam Livingston. I am the Bitcoin Wizard. I hope you enjoyed this pragmatic adoption case for Bitcoin. If you enjoyed the content, please like the video and subscribe to the channel. That way you can support me spread the orange gospel of Bitcoin to the masses. Have a very terrific day, everybody. Do not party too hard. Class dismissed. This video is sponsored by Solvana, and if you are interested in gaining Bitcoin upside while keeping your principal protected, Solvana may have built the most aggressively bullish product available for people who still enjoy sleeping at night. Yes, you as an investor can receive 50% or more of Bitcoin's appreciation with uncapped upside, while the structure is backed by the Bitcoin position itself and a lien on U.S. investment real estate. Basically, Solvana is putting Bitcoin in body armor. You still get the moon math, while your principal has a rental property standing behind it with a baseball bat. If you are interested, scan the QR code or use the link below. Solvana will help you every single step of the way. They will answer your questions and explain exactly how the structure works. Requesting information carries zero obligation or commitment. Go to solvana.io/capital to buy Bitcoin and MSTR with full principal protection. And you know how excited I get about Bitcoin Treasury companies and the insane levels of institutional adoption of Bitcoin that we are seeing. But don't lose sight of the fact that the most important strategic reserve is your own, Bitcoin in 100% self-custody with zero counterparty risk. This is the revolution. My friends at the Bitcoin Way will train you to be your own bank using the best open source tools. They will turn you into a node runner. They will make you a sovereign Bitcoiner. Go to thebitcoinway.com/Adam to schedule a free introductory call and get started today. Do not delay. Your freedom from the fiat system depends on it.
I think the thing that has really blown me away has just been how absolutely nasty so many people in the community have been to those who are not tech savvy. I mean, Isabella yesterday got ripped apart. I can't remember what his name is. But either Bitcoin is for everyone or it's not.
Yeah.
But it's not okay to rip people apart for not being technologically savvy to deal with this. And it's not okay to go and attack people that have been in the industry for a while, assisting in that hyper Bitcoinization vision that we all have. And like, it's just not okay to be disrespectful, and it's not okay to like say nasty things to them or about them or completely attack them or say things like, oh, you deserve it because you don't know how to deal with a cold card. Well, you know what? The product sucks.
I couldn't agree with that more.
Like, if it's a product that exists and that you have to have technical background to use it, then it's only a product for technical people. Then don't sell it to anybody else.
Yeah, Tracy, I couldn't agree with that more. If the device had been coded correct, then the faulty path would have never been available. If you said, I'm not comfortable rolling dice, shouldn't have been able to go any further and set it up. A lot of people didn't roll dice, and it's really, really insane that people who have never even heard the word entropy be responsible for creating their own. I mean, narrative is just absolutely out of touch.
I had no idea what entropy was. And before anybody attacks me, English is not my first language. So I had to look it up in a dictionary. Then I had to like look up what it means within like the context of like this thing. And like, that's not the point. That's not the point. Either we're moving to take the whole point of institutionalizing Bitcoin is so that we can have like more things to do with it, less complicated technologies to work with, right? The more people we gather into this ecosystem, the more brain power we bring into the ecosystem, the more tools we have to use these products in an easier way. If companies are going to build products that people don't understand, then, I mean, you're SOL because your product is only for a few people, and most of those people are Bit 110 people, and most of the people aren't liked to begin with. So there you go.
Good day, everyone. My name is Adam Livingston. I am the Bitcoin Wizard, and today we are going to be talking about the ultimate strategy bull case because a lot of people still don't understand what strategy is actually doing. What is Michael Saylor's Bitcoin endgame? Well, I am here to tell you this, my friends, because our country, we have reached this advanced stage of the empire where our families, we need 3 subscriptions to watch 1 football game. We need a 6-year loan to purchase a 12-year-old leased Kia. And we also need an app to borrow $40 for groceries. But somewhere inside of this magnificent post-COVID casino, Michael Saylor looked at the monetary system 6 years ago, and he reached a conclusion that is so extreme that it sounded insane right up until every single major institution in the world began copying pieces of his playbook. He almost realized that Bitcoin would be something more than an appreciating asset. Bitcoin could become the reserve beneath an entirely new capital architecture. And this is what a lot of the Bitcoiners get wrong themselves. They want Bitcoin to be money. Well, guess what? Bitcoin is more than money. And physics itself gives us the cleanest language to actually express what he actually built. Civilization itself is an open thermodynamic system. It's very simple. Civilization pulls usable energy from the environment, then it performs work, then it temporarily pushes back against decay, like roads and power grids and infrastructure, semiconductor fabs, legal systems, data centers, what have you. All of these things are all expensive islands of order